Trading and fronting like what in Rome. Tom McKenzie is in London, and here are your top stories.
And there's more to come. We've only been here 19 days. I want to see over the next year, people retain more of their income, because I believe that it's the British people that are going to drive this economy, and that's why I want people to retain more of the income that they earn.
Sterling crash. The pound plunges to a record low as Chancellor Kwasi Kwarteng vows to press on with tax cuts. Watching for intervention, expectations mount for assertive action from the BOE, with Deutsche Bank calling for an emergency jumbo hike. Plus, the end of the Draghi era. Italy's Giorgia Meloni wins a clear majority in Sunday's election, ushering in the nation's most right-wing government since World War II. We will briefly check in then on these futures. We are going to be laser-focused on gilts and, of course, the pound, which has taken another leg lower in the session today, of course, on the anxiety, the risks building up in this UK economy, with the Chancellor, as we said in the headlines, doubling down on those plans for tax cuts. The context, of course, that you saw a 3.6% drop for the pound in the Friday session. We were at levels around 106 the last time I checked. We'll get an update of the pound shortly. Futures, of course, had been pointing lower. Now here's how things are playing out. Just in the first few seconds, the Spanish IBEX down 0.8%. Over in France, losses of 38 points, down 0.7%. And the FTSE 100 is currently range-bound. You will get divergence between the FTSE 100 and the more domestic stocks, the FTSE 250, in terms of the vulnerability to this tumble in the pound. Future stateside pointing to the losses of 0.8%. And further, very rapid sell-off in terms of bonds across the spectrum, across the yield curve, currently 2-year at 433. That is a move higher by 13, almost 14 basis points at the front end of the yield curve. We're going to be hearing from Jay Powell and others of the Fed, many speakers coming out later this week, so we expect further volatility in these bond markets. Bank of America now saying that the global bond markets are at their most bearish, the worst slump in global bond markets since the late 1940s. Euro dollar at 96, the single currency under further pressure, down 0.4%, and certainly Italian politics will be part of the mix for the euro, as well as the US dollar, of course, getting back to those record levels. Whether Meloni continues to stick with those promises to the Europeans and to Brussels around the reforms needed to access that potentially 200 billion euros of funding from Brussels will, of course, be a key question, as will the spread between BTPs and bunds. Here's the pound then, 106 on sterling, a drop of 1.6%, pairing the heavier losses that we saw in this session, but building over 3 days, of course, on that extreme drop that we saw on Friday. That continues in this session, that we have paired some of the heavy losses. This was down a little over 3% just an hour ago or so. That is sterling, 106. Will the BOE have to intervene? Will there be an extraordinary meeting or announcement? Will there be jawboning? Key questions. And how much political pressure will the new Prime Minister come under? We have gilts as well, I think, but if we don't, we'll get over to managing editor Mark Cudmore, who's going to be breaking down what's happening across the bond space here in the UK. Mark, of course, you are also focused on what's happening in terms of gilts, given what we saw in terms of the significant sell-off on Friday.
Yes, Tom, we do have live gilt yields, and the 5-year is currently coming in about 17 basis points above where it closed on Friday, generally bouncing around that 20 basis point above market. It's a little bit less than the 5-year because this market, as you mentioned, Tom, broke on Friday, moving 50 basis points. It's amazing to think that on the 1st of August, this market closed at 1.54%. So we've basically done 270 basis points in less than 2 months. Now, this is the 10-year history of 5-year UK yields. And you can just see quite how extraordinary this move is. 270 basis points in less than 2 months. That shows this market is broken. Now, how far can it go? Let's put this chart in a 30-year horizon, and you can kind of say, if we're returning to the old normal, maybe I can get this in a 30-year, maybe in a few minutes, then you can see that really we're just at the bottom of the range of where we can go. This is a slightly different chart at the moment, but I will come back to that later on. So essentially, this move could be going to 5%, could be going much higher. The whole curve is about to go an awful lot higher. The problems in the UK are a twin deficit problem, and until those fears are assuaged, well, this problem is going to get much worse. One way the pressure is an outlet is, of course, on the fact that the pound continues to weaken. But if the pound doesn't weaken significantly enough to attract really, really discounted buyers, i.e. the pound weakening significantly more from here, then there's going to continue to be upward pressure in yields. There's no reason to cap it just now. And of course, if there's speculation that the Bank of England might come in and do an emergency rate hike, that's just going to fuel those fears of people wanting to sell their gilt positions out.
Yeah, markets pricing in a further 150 basis points from the BOE in terms of rate hikes by November. Checking in then across the gilt curve, Mark Cudmore, thank you very much indeed. Of course, Bloomberg's MLive managing editor, and just bringing you up to speed with the price action then across gilts. The 2-year at 418, that is a jump of 22 basis points at the front end. 16 basis points is the move on the 5-year at 424, and that action was very pronounced on Friday on the 5-year. 424 on the 5-year, the 10-year at 406, so comfortably above that 4% level now for UK 10-year. That's a move of 24 basis points there at the benchmark 10-year gilt. 30 years at 427. Just comparing with what's happening in Italy, 449 on the Italian 10-year. So you're just about 49 basis points, about 49 bips above UK gilt 10 years on the Italian 10-year, despite the geopolitical risk there as well. A 24 basis point move there on UK 10-year above 4%, 420 on the 2-year. Francine.
Yeah, what's funny but not funny is actually I'm here covering a pretty big election with the first female prime minister, and every guest that comes on, you know, the first thing they ask, they don't want to talk Italian politics, but they ask, is the UK okay? So let's ask that question to Garfield Reynolds, chief rates correspondent in Asia, also joining us, Semos Yotakis, head of FX at Barclays. Garfield, first of all, if we see $1 to the pound, is that the floor or can it go lower?
Oh, I think it can go significantly lower. That's the story this year for every currency except the US dollar, is that just when you think you've found the floor, it turns out there's at least one more basement underneath. I was looking earlier today at what's gone on with the yen, and when it went through a record low on a real effective exchange rate basis, it ended up going another 13% below that previous record low. So that gives you some sort of idea of what can happen once currencies go beyond what we thought was their floor. The big question for the pound is, what does the BOE do? Because, of course, the yen's slide was driven by the uber dovish policies of the Bank of Japan. Now, the UK central bank is far from dovish, but ultimately investors are deciding that the UK government has an ultra-loose fiscal policy. So everybody is waiting now to see how the Bank of England responds to the pound crashing at the fastest pace since Brexit.
Let's bring in Semos Yotakis, and head of FX at Barclays at this point. Thank you for joining us in the studio. Your views on that point then? Do we get parity with the US dollar? Is that the new line in the sand for the pound? And what do you expect the BOE function to be?
I think that it's pretty clear that the BOE needs to step in. And the main problem for the pound is that, as you guys have said, the expectations have now increased a lot. And for us, the risk is that they may actually not deliver as much as, at least in our forecast, as much as is priced. And that would put extra weight on the pound until the Bank of England delivers what it needs to deliver, basically.
Thomas, what kind of extra pressure on the pound? Like, what's the lowest that sterling could go to before the BOE needs to act?
Well, I think that they probably need to act already, or they have already come under the spotlight where they need to act. Now, how much more can the pound move? If you generally expect the pound itself to adjust the current account or the balance of payments by itself, typically academic literature tells you that exchange rate moves need to be very large because the pass-through to prices is small, and from pass-through to prices to demand tends to be small as well. So you need very large moves to trigger the kind of adjustments that are required. So, you know, if this Bank of England doesn't deliver the rate tightening to control the pound, to control the economy, to control the current account deficit, then obviously, you know, the pound can have pretty chunky moves in addition to what has already happened.
Garfield, UK 10-year, currently the yield above 4% for the first time since 2010, currently at 4.10 on the 10-year. Are we starting to see the start of a buyer's strike now around UK debt?
Well, I'm not sure about that. I mean, the lesson across markets this year has been that there will be buyers even as yields rise. The problem is that they're just not enough to, you know, hold down yields. And in particular, you know, you've got, maybe it's a partial buyer's strike. Anybody who is looking to buy and hold just to get yields, they might take a look at the at gilts and say, yeah, I think that's worth it. That's got to be somebody who's not too worried about marking to market. The big, you know, question, again, it all comes back to the BOE and where the pound ends up going. Because at the moment, you've got to be thinking, well, yeah, UK yields are above 4%. Okay, that's maybe where we're getting to it, because now they're 25 basis points or more above where Treasury 10-year yields are. If they're not at least that far above, then why would you buy gilts rather than buy Treasuries? Both are going to fall. Both are giving you a decent amount of yield, and you've got fewer questions about the overall credibility of the US and of the Treasuries market.
Themos, very quickly, next level for the pound.
I think that if the Bank of England doesn't come out in a very hawkish way, I think it's pretty clear that the markets are looking for parity for cable.
Okay, fantastic. Parity for cable then, if the BOE doesn't intervene in an aggressive manner. Garfield Reynolds, thank you, Chief Rates Correspondent out of Asia, and Themos Fiatakis, Head of FX at Barclays. Very pleased to say will stay with us. Now, Liz Truss's new UK government has had a dramatic start, as we mentioned, with the pound plunging on its fiscal event, of course. The opposition Labour Party says it would keep the cut in the basic rate of income tax announced by the Chancellor, but would reverse the changes to the top rate. Let's bring in then Lizzie Burden, who joins us from the Labour Party conference in Liverpool. Lizzie, what have Truss and Kwarteng been saying over the weekend, and what's been the response?
Well, Kwarteng has said over the weekend that he would add to the fiscal event announced on Friday with even more tax cuts funded by borrowing, and that's what's so offensive to the markets, hence the fall in the pound this morning. Now, he said that markets will react as they will. That's exactly what's happening. Ignore markets at your peril. BOE traders now seeing 150 basis points of hikes in November, which implies an intra-meeting hike. Our economists in-house at Bloomberg Economics have just updated their forecast. They now see 100 basis points in November if we don't see an intra-meeting hike. And it means that the Bank of England and the Treasury are going to be pulling in opposite directions. There's also the question of whether the Bank of England will put the brakes on active gilt sales to stop an overwhelming of the market. But really, the worry would be for Andrew Bailey that he looks as if he's responding too much to fiscal policy rather than inflation. But as you say, an analyst at Deutsche Bank, even on Friday before all these moves, was saying that it's going to be necessary for the Bank of England to regain credibility, that it needs to step in. This really is a gift to Keir Starmer, the opposition Labour leader, at his conference here in Liverpool.
I mean, what really struck us is 150 basis points BOE rate hikes by November. I don't know what we end up with in the terminal rate. And actually, the longer the BOE leaves this, the bigger the crash. Yeah, and you've had really harsh talk from
For example, Larry Summers, former US Treasury Secretary, saying that the UK is starting to look like a submerging market, going further than just saying that these kinds of currency moves are the sorts of thing you'd see from an emerging market currency. It is a bleak picture in the markets, and you would expect Kwarteng to at least come back and try to reassure the markets in some way. But if it's really everybody looking at the Bank of England to try and save the pound at this point.
Lizzie, thanks so much. Lizzie Burden there joining us from the Labour Party conference. So we'll have plenty more, of course, market moves. Also coming up, a new government here in Italy. Giorgia Meloni set to become the country's first female prime minister. We'll discuss that next. And this is Bloomberg.
digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
But look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. We are 16 minutes into the European trading day, and what a trading day, particularly when it comes to these gilt markets. Just a huge sell-off that we're seeing. Yields now up 50 basis points on your 2-year here in the UK. 446 on gilt 2 years. That's a move higher by 50 basis points. The 10-year above 4% for the first time in at least 12 years, at 417 for the benchmark 10-year. That's a move higher by 35 basis points. The 30-year a move higher by 30 basis points. I'll just check in the pound view as well. 106, that's a drop of 1.5%. Just pairing some of the heavier losses we saw at the start of the session. But again, this aggressive selling of UK assets as the Chancellor came out of the weekend and doubled down on his tax cut plans. And the question for me is, something has to give, either politically within the Conservative Party or the BOE having to step in with some kind of intervention, Francine.
Yeah, I have to say I'm here covering Italian politics, but actually everyone's really transfixed with this move of the entire yield curve. So it's not the usual moves that we see in gilts. The entire gilt curve has shifted at least 25 basis points higher from Friday. The short end is up 35 basis points. That is quite a move. And this is probably, I've never sounded so British. It's so understated. It's quite a move, Tom. I'm speaking like Tom McKenzie. So let's switch the focus also on Italy. Giorgia Meloni has won a clear majority. So this is, of course, in the Italian election, setting herself up to become the country's first female prime minister at the head of the most right-wing government since World War II. Well, let's get back to Themos Fiotakis, head of FX at Barclays. Themos, there was so much concern a couple of months ago when Draghi stepped down that Italy would actually turn Eurosceptic, maybe not agree with the rules that the EU set in place to get that $1.9 billion in money of tranche in December. Now, she seems to be more moderate economically. Are the markets assuming wrong?
I don't think so. I think that at a first pass, Italy has seen what it is to be under the microscope of the markets and how unfeasible political agendas become when you don't have the markets agreeing with your plan. So throughout the course of her, election campaign, Meloni has stressed quite firmly that fiscally she will be responsible. Now, there are elements of her agenda that will come back as a question mark over time in terms of internal political dynamics within her coalition. But I think there are two important things to keep in mind. The first one is that this is not the European setup that we were a few years back. Europe is now facing a common shock, and they are a lot more keen to work together, even on the fiscal front, to accommodate some of the shock. The other thing to keep in mind, and this is a good contrast to the UK, is that although both the UK and Europe are being hit by a terms of trade shock, which beyond the price shock, it's also an income transfer, they're losing part of their incomes to producing nations, Europe is actually not trying to actively lean against the current. They're trying to smooth the shock or distribute the shock within the population. So they're not actively trying to swing in the other direction with fiscal policy. So far, it has not been as extreme of a pressure on parts of Europe as we've seen in the UK.
Themos, where does that leave the euro, currently trading at 96.88 to the US dollar?
Look, I mean, there's no doubt that the euro is cheap. But the decline, the deterioration in terms of trade and the very aggressive policy makes the cyclically adjusted fair value decline all the time. So a big part of the decline in the euro is very fundamentally justified. And, particularly the last part of the move below parity has been driven partly by what's going on in the UK and broader risk premium, but also partly by a very, very hawkish Fed and a weak China growth setup. And both of these things, at least in the near term, are probably here to stay. So it's very hard to make value statements at these levels, and you just need to keep at the events as they're coming and as they are deteriorating, and either hope for either global growth to change and improve, or to hope for the Fed to just put an end to this, or a pause to this dollar rally, which doesn't seem by the recent statements by Powell that it's happening soon.
Themos, I was also going to ask you about China, actually, on renminbi. I mean, we're seeing some of the authorities trying to support renminbi. I mean, is it time that we get a new Plaza Accord, given everyone's trying to fight their corner, and maybe united, it'll have more of an impact?
I think that is a very good question, and this is on top of mind for a number of investors, but we're probably not even close to that, in the sense that, A, if you look at interventions as they've been happening, they've been unilateral. There hasn't been a joint intervention. B, the U.S. is trying to tighten financial conditions. They don't want to lean against that financial condition tightening. And C, if there's any agreement, is that this is a tightening of an increase in rates that the rest of the world should follow, but the rest of the world is in a much weaker growth state. So as rates increase, the markets feel that the increase will come with a price further down the line for growth. So all of that probably says that this coordination that you're talking about is probably economically at this stage not particularly feasible.
Themos, thanks so much. Themos Fiotakis, their head of FX at Barclays. Now, coming up, we'll have plenty more, of course, on the markets, much more on the pound as the currency drops to record lows. Plus, we continue our coverage here in Rome as Giorgia Meloni wins a clear victory in Italy's election. This is Bloomberg.
is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about those who says I love you and then betray you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
We have to be able to give our customers vehicles, that are their primary vehicles that are EVs, and to be able to do that, we need to have range and infrastructure, and we need to remove the pain points, and so that's what we're doing.
Welcome back to the Open. 24 minutes into your European trading day. You're flat across the European benchmark. Gains on the S&P E-minis of 0.1%, 0.2% on the Nasdaq futures. A couple of individual names just to zero in on, including Unilever, on news that the CEO of 5 years, Alan Jope, will be stepping down next year after challenging 2022 after the failure to buy the GSK spin-off, the consumer healthcare unit of GSK. That fell flat. And pressure from an activist investor. So investors cheering that news, currently up 2.8% on Unilever. UniCredit, we're just marking some of the Italian banks on the back of the win by the far right over in Italy. And NatWest is lower by 2.3% as we continue to watch the ramifications of this ever weaker pound and higher yields on the banking sector here in the UK. One of the top losers across the FTSE 100 is NatWest, down 2.3%. Let's get to the Bloomberg Business Flash now with Alice Atkins. Alice.
Morning, Tom. Shell is to exit its 2 offshore wind projects in Ireland, leaving Simply Blue Group in search of a new partner. Offshore wind developer Simply Blue says it remains committed to completing the sites off the coast of Cork and Clare. The projects aim to deliver a combined 2.65 gigawatts of floating wind power for Ireland. China Construction Bank is setting up a $4 billion fund to buy properties from developers as policymakers step up efforts to contain a real estate crisis. The bank says the fund will invest in existing assets of property developers and renovate them into rental housing. CCB says the fund will last for 10 years with a possible extension. That's your Bloomberg Business Flash. Tom, Francine.
Alice Atkins here in London, thank you. Coming up, we are live in Rome as Giorgia Meloni wins a clear victory in Italy's elections, setting up the country's most right-wing government since World War II. Francine Lacqua is on the ground. This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories.
And there's more to come. We've only been here 19 days. I want to see over the next year, people retain more of their income, because I believe that it's the British people that are going to drive this economy, and that's why I want people to retain more of the income that they earn.
Sterling crash. The pound plunges to a record low as Chancellor Kwasi Kwarteng vows to press on with tax cuts. Watching for intervention, expectations mount for assertive action from the BOE, with Deutsche Bank calling for an emergency jumbo hike. Plus, the end of the Draghi era, while Italy's Giorgia Meloni wins a clear majority in Sunday's election, ushering in the nation's most right-wing government since World War II. Tom, I know I'm here covering the elections, but I'm absolutely transfixed by what's happening with the gilt curve. Where are we?
Yeah, what remarkable action we're seeing across, as you say, the gilts curve. The 2-year most pronounced, the last time I checked, yields up by about 50 basis points on the 2-year. The 10-year comfortably above 4% now in terms of UK gilts. Across the equity markets, across Europe, you're seeing now losses of 0.2%. It's been a choppy first 30 minutes of the session as investors look for some kind of direction. The sell-off, though, across global bond markets. And Bank of America putting this in context for us in terms of the worst year for global bond markets, they say, since the late 1940s, 1949. Here we go, the benchmark European Stoxx Index 600 down 0.1%. Over in Germany, gains of just 0.2%. And the FTSE 100 up 0.4%. We know that some of these companies benefit, of course, from the weaker pound, and the weaker pound is certainly what we've got. 107 on sterling, but of course, expectations, or at least calls, for the BOE to step in to support the currency. The FTSE 250, last time I checked, was down about 0.3%. That's a much more domestic-focused index. The pound, 107, there you go, drop of a little over 1%, preparing the heavier losses we saw at the start of the trading session for sterling earlier this morning. The 2-year, 444, again, 48 basis point move. Just remarkable sell-off at the front end through the curve, but most pronounced at the front end here in the UK. That's 411 on the 10-year, so again, comfortably above 4%. The first time you've been above 4% since 2010. FTSE 100, there's the mark on that, up 0.3%. Again, some of those companies benefiting from softer sterling. Let's move it on and have a look at how the sectors then are shaping up. Technology gaining 1.7%, 1.1% across consumer products. Unilever is a story as well, with the CEO being announced. The CEO is going to be stepping down, Alan Jope, next year. Investors welcoming that after a challenging year for that company. Basic Resources down at the bottom of the list, losses of 2%. You'll see Brent below about $85 a barrel, WTI lower as well. Again, on these inflation and recession concerns, insurance, banks and real estate also all taking a hit this morning. Francine.
Tom, Italy, of course, about to usher in a new government. Giorgia Meloni has won a clear majority in Sunday's election, setting up herself to become the next prime minister and its most right-wing prime minister since World War II. Well, joining us now is Luigi Buttiglione. He's founder of LB Macro. Luigi, thank you for joining us. Many questions as the market's trying to understand exactly who Giorgia Meloni is. What concerns do you have about her possible next government?
Well, thank you very much. I'm very glad to be here. Well, the concerns are not too much into whether she is a fascist or these kind of things. The concerns, and I hope the new government will clarify this as soon as possible, is that they could do something close to what the UK just recently did. I think what the UK did is a good lesson on what not should be done by a high-debt country like Italy. I think some reassurance, and Giorgia Meloni, I would say, was quite good before the election. Maybe other members of the coalitions were not along the same line. It was quite good at reassuring markets that she's not into fiscal profligacy. But it's very important that the new government does that, because for a high-debt country like Italy, without also free foreign exchange, monetary sovereignty like the UK, it could be extremely dangerous to indulge into a fiscal expansion, which could be extremely dangerous for DTPs.
So, Luigi, what you're telling me is that if you were to advise the government, you would say stick to the plan, don't spend too much, certainly don't raise the debt, and actually don't do any tax cuts. Who do you think will be the next finance minister of Italy?
Well, I don't know who will be the next finance minister, but I think that will be his job. To reassure markets is the first thing for a high-debt country. As I said, I mean, if you want to indulge in tax cuts, you have to make sure that there is an appropriate coverage for that. You cannot just increase debt and that's it, as if the debt doesn't exist. And then I think for Italy, this is the moment for Italy to do, quote-unquote, the right things. All things which have been postponed for many years, which have to do with the supply side of the economy, increase productivity, and so on. This is the moment. I mean, this is the moment for supply side measures rather than demand support measures.
So, Luigi, what would you prioritize in a budget?
In the budget, as in the very first short run, I would stick with what was decided by the previous government. And then going forward, I don't think it's a problem of using the budget to stimulate the economy. The support which has been given to the households, I think, is important. I would not increase that. I think what will be important maybe to be selective in providing some supports to some companies on some sectors which are really at risk of going underwater because of the increase in energy bills. But other than that, I will stick to the recovery plan. Maybe in case I would readdress it towards energy, which I think is very much of a priority. But I think really, as I said, this is the moment to do the right things in Europe, in Italy, to address the real problems which have jeopardized the Italian economy in the last 10 to 20 years. And in case, from that standpoint, I think it's important that the ECB is not in the way to that. I mean, the recent hikes in interest rates could be a bit of a problem for a country like Italy.
Luigi, would you worry about the stability of the coalition if Giorgia Meloni becomes prime minister with her current center-right partners?
Sure. Well, I would say not too much. They've really been, especially La Lega, has been weakened by the results of the elections, and I'm not too sure Salvini will be as powerful as to weaken Giorgia Meloni's win. I don't think it's in his interest, at least in the short run. I think probably I would say that at least for the near future, the majority will be quite solid. I think the main risk would be the market. Say if they do something which really jeopardize the credibility of Italy in financial markets, and then this could create a problem for sovereignty for Italy, and then for the stability of the government. I think that would be really the priority, to be really substantially reassuring for the market before doing it. If they do that, I think the government can survive. Can go ahead and do what they want to do.
So, Luigi, do you have... Yeah, and so I guess the first step to that is really doing everything to try and access that 1.9 billion euros of funds from the EU that should be disbursed in December. Do you think, under any circumstance, that would be in jeopardy?
I don't think so. I don't think Giorgia Meloni seems to inclined to do anything which would put that in jeopardy. I think maybe the only thing they may want to do is just to make sure that say because of what's happening, say on the energy side, for instance, there is maybe need to readdress some funds more in that direction or in other directions. I don't think they will try to do anything which could be destabilizing and then self-defeating for the government in the short term. I don't think that would be very wise, and I don't think they will do it.
All right, Luigi, thanks so much. Luigi Buttiglione, their founder of LB Macro, of course, some great insight. Also, actually, one of the names, I didn't want to embarrass you, Luigi, but one of the names touted as possible finance minister. Now let's get straight to the Bloomberg First Word News with Alice Atkins. Hi, Alice.
Hi, Francine. A number of small protests have broken out in Russia against President Putin's conscription plans. This as fears grow that the Kremlin may ban some men from leaving the country. Over the weekend, people waited for hours in long lines at land crossings into Finland, Kazakhstan and Georgia. Moscow attempted to reassure citizens, saying some will be exempt from being forced to join the army. China's Communist Party has reaffirmed President Xi Jinping at its core as it published the list of delegates for next month's landmark twice-a-decade leadership summit. Xinjiao news agency says more than 2,200 officials were elected for the 20th Party Congress. The twice-a-decade gathering starts in mid-October, with President Xi Jinping expected to secure a third term in office. And the Philippines is holding talks to buy fuel and other key commodities from Russia. President Ferdinand Marcos Jr. told Bloomberg the country is close to deals with some fuel suppliers. He says the Philippines' national interest in diversifying energy sources overrides concerns about Russia's invasion of Ukraine.
Now maybe we need to approach Russia and say that maybe they can loosen up and provide us with some fuel. The political side of it has been, of course, a little tricky, but nonetheless, the national interest comes first. And so we have to find those new sources of fuel.
Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom?
Alice Atkins here in London. Coming up, the pound plunged as the new UK Chancellor doubles down on his tax cuts in comments yesterday, and gig yields, of course, surging this hour as the debt markets reopened at 8 a.m. UK time. More, of course, in this aggressive sell-off across gilts and the pounds. That is coming up, the analysis on where this leaves this market and this economy. This is Bloomberg.
Chinese technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China, of the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general, but the best ones we have seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome back to the Open, 44 minutes into European trading day. Some lines crossing from the Bank of Japan Governor Kuroda on the back of that intervention that we saw last week, saying the government FX intervention was appropriate. The yen currently trading at 143, close to 144, just down 0.3% in the session. Kuroda saying the FX intervention addressed excessive yen moves, and that's when, of course, the yen crossed through 145. Kuroda saying that they will continue to closely collaborate with the government, will closely watch moves in foreign exchange markets. That's the redhead, though. Kuroda saying that the government FX intervention was appropriate. 143 on your yen. Let's get back to the politics of the UK, because, of course, the pound is the other FX and currency that is taking up so much of our attention today. And I'll just note that the pound is currently at 107, down a little over 1%, pairing some of the heavier losses. Of course, after a frantic 20-minute sell-off this morning by traders, compared by some to the flash crashes of the past. And over the weekend, the UK Chancellor Kwasi Kwarteng vowed to press on with more tax cuts.
And there's more to come. We've only been here 19 days. I want to see over the next year, people retain more of their income, because I believe that it's the British people that are going to drive this economy. And that's why I want people to retain more of the income that they earn.
The UK Chancellor speaking there. Let's bring in Lizzie Burden, who joins us from the Labour Party conference in Liverpool. Lizzie, what else have Truss and Kwarteng been saying over the weekend? And what's the response been?
Well, Kwasi Kwarteng says that he's got more tax cuts in the pipeline to add to all of the tax cuts that he already announced on Friday, the biggest raft of tax cuts in 50 years, funded by borrowing. That's what's most offensive to markets, and that's why you've seen this reaction today. What a scene setter for Labour Party conference. I'm here in Liverpool. We're going to expect the opposition Labour leader Keir Starmer to try to set out his vision for how he would be an alternative Prime Minister. But after the fiscal event on Friday, he's had to clarify that while he would reverse the cut to the top rate of income tax, he would keep the cut to the basic rate and the reversal of the rise in the payroll tax. So here, Keir Starmer is really going to have to justify how he's going to pay for all that, as well as investing in public services, as well as setting out a broader vision for the economy, as well as reassuring voters that his position on strike action, on unions, is clear. Because, of course, here in Liverpool, you've got the strike at the port, workers not happy that they're not getting a pay rise in line with inflation. And so Starmer's got an open goal, but he's really got to make sure that his party can take advantage of it.
Labour Party conference. Actually, how will the opposition draw its battle lines?
Well, precisely as I just said, Keir Starmer needs to show that while he would agree, any government would agree, that growth needs to be improved, productivity, business investment, Starmer's point is that he would split the proceeds more fairly. The point about the Conservative announcements on Friday was that disproportionately they're going to benefit rich white males, rich males in London, I should say. And so Starmer now needs to show that he can create economic growth without adding to inflation, without unsustainably adding to borrowing, and we're expecting the Shadow Chancellor Rachel Reeves, who I'll be speaking to very shortly at noon, to set out her vision for how she would grow the economy by investing in green energy and green jobs.
Yeah, it's about crafting that message that's going to cut through, isn't it? Because whatever you say about the market reaction to this Truss policy mix, it is a clear signal and a clear message for voters, whether you like it or not. Bloomberg's Lizzie Burden, thank you very much, joining us, of course, from the Labour Party conference on how the opposition party is reacting to this and readjusting as they eye that potentially 2024 election. Let's focus in on the UK economy in more detail now, with GDP, of course, growing less than expected in July, inflation remaining, of course, near 10%, and rates continuing apace. If we look at the front end of the yield curve now, just coming off a little bit, but still 44 basis points as a move higher across the 2-year at 440. And following the so-called fiscal event on Friday, newspaper front pages have been splashed with little else. The Sunday Express highlighted the Chancellor's double down on taxes, the paper saying, "You ain't seen nothing yet." Just one example there. Let's dive deeper then with Jamie Rush, Bloomberg Economics Chief European Economist. And Jamie, just your analysis of why the markets have reacted the way they have to this policy mix.
Well, I think the big picture is that it's tax cuts, they're big, and they're not funded by anything. So they haven't announced anything on the spending side to balance the books. And what they have sort of doubled down on is the belief that these tax cuts will somehow raise growth and they will pay for themselves. And this is a narrative which just doesn't wash with markets. So this is one of the reasons why we're seeing what we've seen. A lot of what was in the budget was already known, though, in the sense it had already been trailed. So there was also a big role to play in just the general tone on the delivery. And it's just that dismissiveness of the need to balance the books. And then also the comments over the weekend saying that they want to do more. It probably felt tone deaf to markets, felt like not being heard. And we've seen the reaction this morning.
Jamie, what I find crazy is that actually also the Chancellor doubled down on Sunday after seeing the reaction letter on Friday. So what happens now? The government either does a U-turn, a 180, or the BOE hikes really aggressively. I mean, the market's repriced 150 basis points by November. What does that mean for growth?
So, I mean, the currency itself has moved by about 8% since the Bank of England last produced an economic forecast, and that's going to lift inflation by about 0.6, 0.7% over the coming year. So the bank has to respond just to that movement in itself. So we are expecting now that a 100 basis point move is likely, and that is going to slow growth. It's going to lift unemployment relative to what it otherwise would have been. People are going to feel it. The question is, when are we going to see this move in policy? And my feeling is that the government will probably wait. They will, so the Bank of England will wait. They'll give the government an opportunity to recalibrate policy and then respond. So I think we've got a little bit of time to wait yet.
Okay, that is the call then from Bloomberg Economics, at least from Jamie Rush, Bloomberg Economics Chief European Economist, on 100 basis points from the BOE, but they're going to wait a little bit as they adjust and watch this market fallout from this policy response from the new Prime Minister and her team. Jamie, thank you. Coming up, more coverage of the market meltdown then following the Chancellor's tax cuts. We'll bring you more analysis. This is Bloomberg.
When you think space, you probably think One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Welcome back to the Open. We are 54 minutes into the European trading day, an historic day, at least when it comes to these gilt markets, the kind of moves you rarely see, jumps in terms of the front end, particularly a 49 basis point move at the front end in terms of gilts, 2 years, and you're getting moves of 29 basis points on the 10-year, above 4% at 4.11 now on the 10-year, 4.45 on the 2-year, as markets price in 150 basis points from the BOE by November. Bloomberg Economics expects 100 basis points, and we had the head of FX from Barclays on earlier saying that parity, the pound parity with the US dollar, is likely if the BOE doesn't step in. So that's a quick check on these gilt markets amid these pretty extreme moves. Let's get to Bloomberg First Word News now with Alice Atkins. Alice.
Hi, Tom. Giorgia Meloni has won a clear majority in Italy's election, setting herself up to become the country's first female prime minister. According to projections, her right-wing alliance, which includes Matteo Salvini's League and Silvio Berlusconi's Forza Italia, took about 43% of the vote. That would give the bloc at least 114 seats and a majority in the Italian Senate. A number of small protests have broken out in Russia against President Putin's conscription plans. This as fears grow that the Kremlin may ban some men from leaving the country. Over the weekend, people waited for hours in long lines at land crossings into Finland, Kazakhstan and Georgia. Moscow attempted to reassure citizens, saying some will be exempt from being forced to join the army. China's Communist Party has reaffirmed President Xi Jinping at its core as it published the list of delegates for next month's landmark twice-a-decade leadership summit. Xinhua News Agency says more than 2,200 officials were elected for the 20th Party Congress. The twice-a-decade gathering starts in mid-October, with President Xi Jinping expected to secure a third term in office. And the Philippines is holding talks to buy fuel and other key commodities from Russia. President Ferdinand Marcos Jr. told Bloomberg the country is close to deals with some fuel suppliers. He says the Philippines' national interest in diversifying energy sources overrides concerns about Russia's invasion of Ukraine. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Alice Atkins, thank you. Checking in on these markets. The benchmark here in Europe down 0.2%. Futures in the US turning lower by 0.1%. The Italian FTSE MIB, though, up a little over 1%. But the rout in gilts and the pound here in the UK continues. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
We have to be able to give our customers vehicles, that are their primary vehicles that are EVs, and to be able to do that, we need to have range and infrastructure, and we need to remove the pain points, and so that's what we're doing.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome for the elections, and here's what's coming up on today's program.
To come, we've only been here 19 days. I want to see over the next year, people retain more of their income, because I believe that it's the British people that are going to drive this economy, and that's why I want people to retain more of the income that they earn.
Sterling crash, the pound plunges to a record low as Chancellor Kwasi Kwarteng vows to press on with tax cuts. Watching for intervention, expectations mount for assertive action from the BOE, with Deutsche Bank calling for an emergency jumbo hike. Plus, the end of the Draghi era. Well, Italy's Giorgia Meloni wins a clear majority in Sunday's election, ushering in the nation's most right-wing government since World War II. So the market's really falling out of bed, especially when you look at the UK. So let's first of all check the markets overall, but extreme pressure on currencies all across the world. The pound plunging to a record low. UK gilts crashed to actually send the 10-year yield above 4% for the first time since 2010. In fact, there's a huge repricing of the whole UK gilt curve. Let's bring in Bloomberg's MLive Mark Cudmore. Mark, I don't know whether once we get $1 to the pound, that's a floor, or whether it goes even lower.
I think the pound will definitely go lower than here unless the Bank of England validates the yield pricing we've seen today. So at the front end of the curve, we've seen pretty extraordinary move in yields. The 2-year yields are up about 50 basis points, a little bit lower just so I walked into the studio, but earlier on today it was a little bit over 50 basis points. And unless the Bank of England come in soon and say, look, this market pricing makes sense. Now, they might get away with only delivering that via rhetoric by saying we're going to hike very aggressively in November. But much more likely, they're going to need to actually validate with action. They might be forced to an emergency hike. If they don't, the currency remains the only outlet for the UK's twin deficits, where traders continue to be concerned.
So, Mark, I don't know whether there's a huge repricing in terms of gilts and whether that continues going forward, or whether we're just going to see more on the currency side.
So I think that we're going to get more pressure both in gilts and in the currency. ultimately, we still have deeply negative real yields at this level. And you know, that's very difficult when you've got a country that does have twin deficits. So when you've got twin deficits in a world of rising yields, well, how do you make your debt more attractive? Because you've got to fund those twin deficits, and that means a debt problem. So either you can offer much more attractive yields, and at the moment with UK's inflation rate, they need to hike rates hundreds and hundreds of basis points to get close to positive real yields. So the debt is unlikely to be attractive. So the only other way you can fund those twin deficits is by offering a massive discount through the currency. And that's why the currency has weakened so much this year, and that's why the pressure is going to remain on until people feel enough of a discount is either priced through the currency, or we get some significant rate hikes to ease up on those negative real yields, or most likely some combination of the two.
Mark, I'm kind of transfixed. I have to say, I'm looking at the market moves and I'm thinking, like, what did the Chancellor say? Why did he double down? I mean, they're really betting that this will spur growth down the line. If you're the BOE, how do you react? So you can't be seen as just going, you know, against your Chancellor straight away. But if they move by 150 basis points, like markets are pricing in, what does that do to the economy? And what does that do to pound?
So the economy is in trouble, but actually the Bank of England have been given cover to move. Because remember, it's only last Thursday that they hiked 50 basis points when the market was kind of saying, look, 75 basis points might make more sense. So they were on the slightly dovish side. Yes, it was a hawkish 50 basis points hike, but they were dovish side of expectations on Thursday. Now, suddenly, if they're going to deliver an emergency hike or justify much more aggressive hiking, well, they can say, well, it's the government's mini budget that provides this cover. It's the government that's providing fiscal stimulus that lets us tighten on the monetary policy side. And that might make sense if they're given time. You're talking, Fran, about whether they can get away with 150 basis points in November. They're going to have to deliver much more than that, and probably earlier. I do think the chances of an emergency hike at some point are rising, unless we really get some very, very aggressive rhetoric from the Bank of England, or we get the government slightly rowing back in their idea that they're going to continue with unfunded tax cuts. But at the moment, it's an unsustainable situation. So either we get an emergency hike, or we see much lower prices in the sterling.
So, Mark, and I know, I mean, this is a nightmare, right, for the balance of payment, for the twin deficits, and actually the UK also doesn't export much. So it doesn't really help at the margin at all.
No, I mean, look, you're right that the economy is in trouble. So if they hike rates, yes, the more real yield they offer is slightly better. Now, today, we've finally seen two-year UK yields rise above US two-year yields. We've seen 10-year yields in the UK rise above 10-year yields. We've got the whole curve above. So suddenly, UK debt is starting to look more attractive on a relative basis, at least in nominal returns. But of course, we have real returns, and UK's inflation problem is worse. You are right that the Bank of England does tighten rates aggressively. What's going to happen to the economy? The UK economy is in deep, deep trouble, no matter what happens. Like, we've been gone beyond the case of worrying about the UK economy and marginal issues there. We know the UK is going to have a terrible 2023. We know it's going to be in deep recession. What we're worried about now is stopping a currency crisis. We can't be concerned about the recession in the UK. We've gone way beyond that level of concern.
All right, Mark, thank you so much, as always, for your great insight. Mark Cunmore there from our MLive team. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A number of small protests have broken out in Russia against President Putin's conscription plans. This as fears grow that the Kremlin may ban some men from leaving the country. Over the weekend, people waited for hours in long lines at crossings into Finland, Kazakhstan and Georgia. Moscow attempted to reassure citizens, saying some will be exempt from being forced to join the army. Now, China's Communist Party has reaffirmed President Xi Jinping as its core as it published the list of delegates for next month's landmark twice-a-decade leadership summit. Xinhua news agency says more than 2,200 officials were elected for the 20th Party Congress. The twice-a-decade gathering starts in mid-October, with President Xi Jinping expected to secure a third term in office. The Philippines is holding talks to buy fuel and other commodities from Russia. President Ferdinand Marcos Jr. told Bloomberg the country is close to deals with some fuel suppliers. He said the Philippines' national interest in diversifying energy sources overrides concerns about Russia's invasion of Ukraine.
Now maybe we need to approach Russia and say that maybe they can loosen up and provide us with some fuel. The political side of it has been, of course, a little tricky. But nonetheless, the national interest comes first. And so we have to find those new sources of fuel.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, Giorgia Meloni wins a clear victory in Italy's elections, setting up the country's most right-wing government since World War II. We'll discuss economic policies next, and this is Bloomberg.
Digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing? When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now, Giorgia Meloni has won a clear majority in Sunday's Italian elections, setting herself up to become the country's first female prime minister at the head of the most right-wing government since World War II. Now, we're joined by Marco Elzer. He is partner at Untitled Chapter. Marco, thank you for joining us.
Good morning,
every time I come to Rome, I usually try and catch up to ask you about the markets, but actually the markets are pretty okay about Italy right now. They're freaking about the UK. Is
The biggest problem is the UK.
Is the UK a warning shot for Italy? You can't spend too much, keep your deficit in check, keep your debt in check, or else.
It's definitely a huge shot across the bow. The fact the Italian markets have not reacted, the world market have not reacted to Meloni's victory is actually a good sign. But I think what's happening in England really is very, very scary. And Meloni is going to have a very difficult challenge to get everything organized because some of her partners are believing in spending cuts, tax cuts, excuse me, and that is not going to be good for the economy. And the same
so
thing
do you
UK
think
is doing.
Marco she'll go ahead with tax cuts given what's happening in the UK and pound at a record low?
She's a very smart person. She's from Rome. She grew up in Rome, and she is very, very ambitious. First of all, kudos to her for having won the election. The first time a woman becomes president of the Consiglio, prime minister in Italy. I think she's going to be smart enough to realize that certain of the promises she made, she will not be able to maintain, and she'll be frank about it.
Yeah, so do you think actually she'll be Euro-friendly? She has been in the past Eurosceptic, and I think part of the largely muted market reaction is they're really trying to figure out what she'll do.
Reading into her, I've never met her personally, but I think her political views are pretty straightforward. She's very much pro-Ukraine, pro-Europe. The problem
Well, she
is...
hasn't always been pro-Europe.
No, she hasn't been.
Right.
Well, tomatoes ripen, they're green, they become red, they ripen. She's changed her views, she's matured. The problem is, I think, is her political allies who may have different views. And that's going to be the biggest challenge for Georgia, to see how she can coalesce sometimes warring factions within her own group.
But she has a big majority. She's done better than both the other parties put together. So she doesn't have to listen to them, or be warring with Europe, or warring with Germany.
When you see, well, first of all, with regards to Italian politics, I think the fact that Lega, which was Italy's very, very successful party, literally imploded since the last elections, and there's going to be some very strong requests to change the leadership. Hopefully Salvini will leave and will be replaced somebody much more intelligent, much more market-friendly, like Giorgetti, who's a very, very erudite, smart person. That could help, and that would actually help Meloni create a plan which is financially viable, because Meloni's biggest, I shouldn't say a flaw, but her biggest lack is she does not have the political experience.
Right. So who does she put as finance minister? This is, crucial for, for the markets to remain comfortable.
I mentioned Giorgetti. I think he's a very, very smart person. I don't have the same views he has, but he's very, very smart, and he is very much listened to by the European Union and by international markets, because he's proven what he's done has been very, very coherent with democracy.
But how she'll deal with the cost of living crisis? I mean, this is a huge problem, right? Energy prices, because of the link also between Italy and Russia, will skyrocket like the rest of Europe, but maybe even more. And this country has a huge debt problem. Will they have access to the 1.9 billion that the EU will give them in December?
With regards to the funding from the European Union, I'm not concerned about, because Draghi's philosophy, whatever it takes, is still the ace of spades, and that's going to work. That's the reason why I think Italian markets have not reacted, Francine, after yesterday's results. I think the problem really is going to be what Conte and his really, really not very smart idea of just giving away money. The reason why M5S, Five-Star Movement, which has got a significant amount of votes, they didn't earn the votes, they just bought them. They promised people money, and people voted for them, which is really, really not very good. And I think the first thing Meloni should do is literally eliminate that. That's going to show the financial markets that she is thinking straight, because a lot of these people, you have to know, and the viewers...
The other concern, of course, is some of her stance in the past on LGBTQ communities, on the fact that she's praised also Viktor Orban, on, her talk on immigration. How will she govern? We're talking about, is she far right? Is she not far right? You speak to people around her, and she says, look, this is a candidate that's matured, that's changed, and that will be more mainstream.
Look, at the cost of making an analogy, which may not be the best analogy, Luigi Di Maio, who was actually a pretty good foreign minister, Minister of Foreign Affairs in Italy, used to sell soft drinks at the stadium. So people do mature, they grow, they change their views. I think Giorgia Meloni, notwithstanding her past, that she was very close to extreme right, I think has matured, and she's going to realize that if she wants to be a leader and be remembered as a leader, she'll have to come.
But I keep on being told that actually politicians don't always mean their words, and what they say is full of political votes. But actually what Trump has taught us, what also Boris Johnson has taught us, Liz Truss, is that usually when you promise things, you try and follow through once you get elected.
And Liz Truss is the proof that poor cable has just collapsed to all-time lows this morning. I think, look, I don't know Giorgia Meloni. She's honest. She does not have a reputation of being a corrupt person, and she's going to do the good for Italy. She's not going to do the good. She's going to do what I think Obama did, is be the president for all the people. Her views on LGBTQ, her views on immigrants, I think are going to have to be perhaps filed down a bit.
Yeah.
That's my only hope, because otherwise Italy's going to be a pariah. Now, what you properly said, Francine, is that what happened to England today is a wonderfully timed warning shot for Meloni, watch out.
Yeah, I wonder whether Maloney's looking at pound like we do. Maybe. Marco, thank you so much. As always, Marco Elzer, partner at Lonson Capital, joining us on a rainy rooftop in Rome. Now, coming up, sterling crash. The pound plunges to a record low as the Chancellor, Kwasi Kwarteng, vows to press on with tax cuts. We'll have plenty more of that next. And this is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together. Now I would have a much more experience about those who says I love you and then betray you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now, Liz Truss's new government has a dramatic start with the pound plunging on its tax plans. Let's go straight to Lizzie Burden, who joins us from the Labour Party conference in Liverpool with a guest. Hi, Lizzie.
Hi, Francine. Well, I am in Liverpool at Labour Party conference with the Shadow Chancellor, Rachel Reeves. Rachel, thank you so much for joining me. Over the weekend, the pound has tanked because of the news that Kwasi Kwarteng is going to add to his fiscal package on Friday with even more tax cuts. Now, you have called it casino economics, but what if Kwasi Kwarteng's gamble pays off and we all feel pretty good by 2024?
Well, we saw on Friday the markets begin to react to what the Chancellor set out in his statement, a series of unfunded tax cuts, primarily for the richest in society. And that has put pressure on sterling, not just against the dollar, but also against the euro. And that has consequences in the real world, because it will push up inflation further. it pushes up the costs of government borrowing, and in turn, it will mean higher borrowing costs for families and for businesses as well. So at the moment, we've got a situation where the Bank of England is got its foot on the brake, and the Chancellor's got his foot on the accelerator.
So should the Bank of England be intervening?
That is road to ruin.
To save the pound? Should Andrew Bailey step in?
Well, look, I was an economist at the Bank of England for many years before I became Member of Parliament, and I respect the operational independence of the bank. But the bank has a clear mandate to control inflation, and they will see the impact that is happening now on sterling and the impact that that will have in turn on inflation. And so there will be further pressure on the bank to increase interest rates. And as I say, that means higher borrowing costs for families and higher borrowing costs for businesses, which is why I fear that for all the talk from the Chancellor last Friday, this is not a plan for growth, because if families have got less money to spend because they're spending more on mortgage interest payments, and if businesses are put off investment because of the cost of borrowing going up, we're not going to get the growth. Trickle-down economics is not going to work. It hasn't worked in the past, and this is just putting further pressure on inflation and interest rates.
So should Kwasi Kwarteng step in to save the pound?
Well, Kwasi Kwarteng at the weekend fueled this sell-off of the pound by doubling down on his package on Friday and suggesting that there is more to come. That's not what financial markets want to hear. They want to hear that the Chancellor has got a serious plan for getting a grip of the public finances. We didn't hear that on Friday. We didn't hear it over the weekend. And now we have that reaction in global financial markets to the irresponsible and reckless statement that we had from the Chancellor on Friday and the comments through the course of the weekend.
So what financial markets and business want is credibility, stability. This is your chance to present yourself as a government in waiting, but isn't the advantage of the Tory package that at least it's clear?
Well, I set out Labour's fiscal rules a year ago, that we would pay for day-to-day spending through tax receipts, that we would get our debt down as a share of GDP, that of course in difficult times some borrowing, responsible borrowing might be necessary, but then subject to that we would invest in the industries and the opportunities of the future. And that's what the National Wealth Fund that I'll be setting out at conference today is all about, because there is a global race going on at the moment for the jobs and industries of the future. Britain risks falling behind in that race, whilst other governments support their businesses to get the jobs, to get the factories to their countries. But we're not doing that. My plans that I'll be setting out today would do exactly that, a serious plan for climate, for growth and for levelling up.
And over the weekend, Keir Starmer said that he would reverse this cut to the top rate, but he would keep the cut to the basic rate of income tax, along with all the spending that you would do on public services. How would you afford all of that without adding to borrowing?
Well, I've been very clear, Lizzie, as I say, that we would fund day-to-day spending through tax receipts. And that means difficult decisions, but that is the honest way and the responsible way to manage our public finances, and will give us the room to invest in those industries and jobs of the future through our National Wealth Fund.
Now, the backdrop to this conference, of course, is the strike at the Port of Liverpool. Workers aren't happy because they aren't getting pay rises in line with inflation. Your deputy leader, Angela Rayner, has said that she would repeal all the government's anti-worker legislation. Would you agree with that, or do you admit that your party hasn't made its mind up on how it handles strikes and unions?
Well, I totally understand why working people are taking industrial action to protect their pay and to protect their jobs. That's why we need to get a grip of inflation. Now, the best thing that Labour politicians can do to get a fair deal for workers is to get a Labour government, and that's why I'll be setting out our plans to do exactly that in our conference today. But look, the government are having a bonfire of workers' rights. They are undermining workers' rights. And I'm not surprised that there is this industrial action. We didn't have this sort of industrial action last time we had a Labour government, because the last Labour government respected working people, respected the trade unions that represented them. That's a very different approach from what we see under this Tory government today.
But the flip side of all of this strike action is, of course, disruption. The whole point of strikes, arguably, this is the worst time to be having it. We need to have economic growth. The supply chain disruption could add to inflation. Shouldn't you get tougher on the unions? Would you get tougher on the unions like Liz Truss?
Well, what is Liz Truss doing? She is fueling the flames of this dispute and adding to the problems. We want workers at work. Workers want to be at work earning a wage. But the government's lack of respect for working people is driving them to this industrial action. We didn't have this sort of industrial unrest when Labour was last in government because we showed respect towards working people. We need to get a grip of inflation. The government's package on Friday did the exact opposite, pushing up inflation rather than trying to get it under control. Workers want a pay rise because they're seeing their wages failing to keep up with the rising cost of living. That is why we must deal with inflation to help protect the living standards of ordinary working people around our country.
So you say that they want a pay rise in line with inflation. Would you give that to public sector workers?
Well, look, we need to grow the economy, but also we've got to get a grip of inflation. The reason why there are pay demands at such high levels is because inflation is at a 40-year high. So the most important thing is that we have a serious plan to grow the economy and a serious plan to get a grip of inflation. We don't have either of those from the government, and that is why people are so unhappy with the direction we're going in.
Rachel Reeves, Shadow Chancellor of the Exchequer, thank you so much for joining me. Later on in the day, Rachel Reeves is going to present her plan for how she's going to grow the economy through investing in green measures. We'll be listening out for that later, Francine, noon London time.
Yeah, Lizzie, thanks so much. Great interview there, of course, trying to figure out exactly how Labour will position itself and the battle lines going ahead. Now, let's look at that. I'm transfixed, actually, about what's happening not only with gilts, but the pound. Traders ramping up bets of the pace and size of interest rate hikes by the Bank of England after the pound crashed due to fears over the new UK government's fiscal policies. To break down the latest market action, let's bring in Bloomberg's Danny Berger. Danny, transfixed, I say. Everyone just can't really believe what's happening.
I know, and here's the crazy thing, Francine, is the pound is down less than 1% now. These are quite the whiplash moves. We had that flash crash earlier over Asia hours, which makes sense. Liquidity is really thin. Cash markets for bonds weren't open yet. So that release valve for anxiety around the UK after Kwasi Kwarteng talked about more tax cuts, the twin deficits, that's how it played out. But this remarkable rally, yes, we're still down, but again, we have climbed back a significant amount of these losses. And a lot of that is because the carnage, instead of the FX market, is now playing out through the bond market. This is VAR shock type levels when you get yields across the board surging in the UK by more than 40 basis points for most of the front end here, nearly 50 basis points for the 2-year yield at a 2010 high. Part of the reason that sterling is doing better, that perhaps there's expectations that the Bank of England is going to get really aggressive. You get yields high enough, and that can entice foreign buyers back in. So what would be levels which you can entice foreign buyers? 150 basis points currently is what's priced in for November, but perhaps that's not enough. Perhaps you need intermediate hikes. This is something George Saravelis over at Deutsche Bank has been advocating for, saying it's not just that, but it's also QT. You got to put it back into the market. Essentially, you need to put stability and credibility back in. Though I was talking to Martin Malone earlier, Francine, who said, nope, it should be BOE and fiscal government aligned, going full in on this trajectory and this hope for growth.
Yeah. I have to say, Danny, I'm kind of obsessed with the yield curve. I mean, I know a lot of people are always obsessed, but if you look at it, I mean, it's the first time in 8 years that the UK 10-year yield is above the US 10-year yield. Let's just think about this for a second. And it was really a huge repricing for the yield, I mean, for the curve across the board, really. It was almost undiscriminatory.
It's true, but I think that's an excellent point, Francine, the spread between the UK and the US, because you have to ask the question, what sort of yield premium, what sort of risk premium are traders going to demand in order to jump in and buy this gilt market? Surely it has to be more than the US. We're seeing that's what it's being priced in at, but it's to some degree, Francine, is just rearranging deck chairs. Annual debt for the UK has now ballooned to over 200 billion pounds because interest rates are going up. It's getting more expensive to service the debt. Is there that full faith in credit? There might not be a risk premium high enough to actually entice investors back in.
Danny, thanks so much. Or Danny Berger there with the crazy, or at least interesting, if I were so British that I couldn't, say something too dramatic, the interesting British moves. Now, Giorgia Meloni has won a clear majority in Sunday's Italian election. Joining us now to talk about all of this is Emanuele Canegrati, member of Liechtenstein Academy Foundation. Emanuele, thank you for joining us. I mean, there's so much going on elsewhere that we kind of forget that we have a new government in place, and actually not many people know what Giorgia Meloni stands for. She says one thing to the international press, another in her rallies here in Rome. What will she do fiscally?
Well, Giorgia Meloni was quite clear on the fiscal point of view. Brothers of Italy fiscal policy is quite right-oriented, so the aim of Brothers of Italy is to cut down taxes. And
can they afford to cut down taxes? I mean, look at the UK, they cut taxes.
Well, it is an interesting question because everybody knows that Italy has quite a tight fiscal space, fiscal capacity, and so this is the challenge for Giorgia Meloni, because if she wants to cut down taxes, she also to be very careful to cut down spending, and this is of course the challenge, because in Italy it's not very easy to cut benefits.
So do you think she'll be calibrated in trying to, you know, if she cuts somewhere, she takes elsewhere?
Yes, in order to pay attention to the balance sheet. Of course, it's not easy in the financial situation, the Italian financial situation, to cut taxes, because debt to GDP ratio is absolutely high, and so Italy is observed from the European Commission, and so I think that Giorgia Meloni will be, very under the lens of.
That will depend on who she chooses as finance minister. Are we expecting a market-friendly, international, or a type of finance minister?
That's another challenge, because if Giorgia Meloni wants to, not to broke with Mario Draghi's legacy, so I presume she could select a market-friendly minister.
Is that what she'll do? To reassure Europe that she will stay the course?
Well, my opinion is that she's rational in the end, and I don't know what Giorgia Meloni is going to do, of course, but I presume that she really wants to say that she doesn't want to break the European Union down.
Yeah.
She wants to stay in line in a certain sense with Mario Draghi's government.
So, Emanuele, if you're looking at this from an eagle's lens and look at the Italian economy and what the prescriptions needed are to fix and to get back on track, what would you be putting in place?
Oh, well, it's difficult to say. What happened yesterday was quite a very strong result, not only for Italy, but for the entire European Union. And, during the electoral campaign, so...
she's considered far right. I don't know, at least she has a clear mandate, but I don't know if Europeans are now looking and saying, finally we have someone who's, has in the past been quite belligerent towards Europe.
Yeah, well, both the European Union and the financial markets, I believe, have a great memory. And so the great challenge is also to reconsider the semantic, if you pass me the word, the semantic of his political position.
Yeah.
And just in order to say, I'm far right or right. And this is the great challenge, in my opinion, because being the far right for financial markets and the European Union means something. Being right and more conservative means something else.
So as the British say, the proof is in the pudding. When do we know that pudding? Is it in the next couple of months where she'll stick or not to the EU plan? Or what are the 2-3 policies that we need to watch out for?
Yeah, absolutely. I believe that Giorgia Meloni is going to take the first choice over the next days. And it will be very important choices for both for European Union, financial markets, and well, we have a budget law over the next days, and this will be the
thing
challenge.
that she'll do.
Yes.
But of course, it could take 1 or 2 weeks, right, for her to try and form a government. So we'll see how that goes. Emanuele, thank you so much. Emanuele Candigrati, they're a member of the Liechtenstein Academy Foundation. Now, some breaking news from the OECD. It's cutting almost all of their growth forecast for the G20 next year. Not great news. I know already it's raining and we have the pound imploding. But they were actually saying that all of them are being cut down. Indonesia, the only member with a slightly better outlook, but all of them actually quite significantly lower. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Unilever says CEO Alan Jope has informed the board of his intention to retire at the end of 2023. Jope leaves after 5 years in the role and more than 35 years at the consumer goods giant, which has said it's facing unprecedented levels of inflation recently. Now Shell is to exit its 2 offshore wind projects in Ireland, leaving Simply Blue Group in search of a new partner. Offshore wind developer Simply Blue says it remains committed to completing the sites off the coast of Cork and Clare. The projects aim to deliver a combined 2.65 gigawatts of floating wind power for Ireland. Now, China's construction bankers setting up a $4 billion fund to buy properties from developers as policymakers step up efforts to contain a real estate crisis. The bank says the fund will invest in existing assets of property developers and renovate them into rental housing. CCB says the fund will last for 10 years with a possible extension. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Coming up, sterling crash. The pound plunges to a record low as Chancellor Kwasi Kwarteng vows to press on with tax cuts. Also, gilts on the move. Or Danny Berger flagging the UK 2-year yields now up 51 basis points. A lot of people and a lot of trading floors will probably have to be sedated now. We'll go through what happens for the UK next. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now, the pound also hovering near a record low after a frantic 20-minute sell-off this morning by traders. Let's also look at yields, and I have to say they're off the cliff. The UK 10-year yield above 4% for the first time since 2010. Joining us now is Bloomberg's Phil Aldrich and David Finnerty. Thank you both for joining us. I have 1,000,001 questions. Let's start with David. David, what happens to sterling now? Does it go below $1? And what does it mean for government policy?
I think the key thing for sterling, certainly in the near term, is these expectations for the Bank of England to raise rates. You look at the markets already factoring in, they're raising rates by up to 160 basis points at the next meeting alone, which is in November. Now, of course, they may act before, they may not. So I think if they don't, the key thing is the rhetoric they come out, because the market's expecting this. If you don't deliver, the market will be very disappointed very quickly, and you'll see sterling sell off. So the Bank of England, any rhetoric has to be very hawkish. We have Hugh Pill, the main economist, speaking tomorrow, and markets will be looking for him to signal that they're going to do something. If that doesn't happen, I think this market expectations are unwound quite quickly, and sterling comes under pressure very quickly.
So, Phil, I know you look at this, almost minute by minute. How problematic, first of all, is it for the Bank of England to almost go against government policy? I mean, there's zero coordination here. Do the two sides regroup and rethink the way forward?
Well, actually, we had Gerard Lyons. Sorry, we had Gerard Lyons.
Sorry, David, let me just go to Phil. Phil Aldrich first.
We had Gerard Lyons, who's one of the sort of external advisors to the government, on Bloomberg Radio this morning, and he was pointing out that this is a new economic framework. So I don't think there is going to be this kind of policy coordination of, we're going to go easy on fiscal measures to stop any inflationary pressure so that the bank doesn't need to raise rates. It's very much the plan is to provide fiscal support for households, etc., and then get inflation under control with the Bank of England. So it feels like the markets are resetting to a new political reality in the UK, and that was really drawn into focus at the budget, which was not unexpected. The measures were not unexpected, but as soon as it becomes real, it becomes tangible.
So, Phil Aldrich, what happens now? Does the Bank of England go aggressively, and what does that do to the economy? Or does the government temper down what they've been saying?
I think, well, first of all, I think to try and stabilise markets, Kwasi Kwarteng, the Chancellor, is probably going to have to provide some more information on the fiscal rules that he's talked about. So there's got to be this sense that the government is going to have some kind of fiscal credibility. There is going to be some, public finance framework in place, which we haven't actually got yet. He just sort of talked about it loosely. And what the bank is clearly going to do is they're going to be raising rates, quite aggressively. We had the half-point rate hike last week. It would be quite shocking if it would send a signal of panic if they had to intervene in markets in between meetings, so before November. But by November, I mean, we're looking at a 100 basis point increase potentially in November, because they're going to have to move faster than expected.
David Finnerty, do you think that the government has just gotten market reaction wrong?
Well, certainly, it depends what the market it was looking for. Certainly, I don't think it quite judged the market reaction at all. I mean, the market going into the mini budget, everyone was expecting, some giveaway, shall we say, but the size of it really did surprise the markets. I think, to be honest, it surprised the Bank of England, you could argue, because if they know this, the question would have been, would they have raised rates by 75 basis points last week rather than 50 basis points? So there's a big discrepancy going on here, and particularly with them adding fuel to the fire by saying, hey, more rate cuts may be coming over the weekend. The market obviously doesn't like this, and the sell-off is reacting to that. And now the catch is for the Bank of England is hands forced, because it's been expected to raise rates by so much now. If it doesn't deliver, then again, the sterling gets sold. So Bank of England's in a bit of an awkward scenario at the moment.
Yeah, awkward. That's so British. It's so understated. Thank you both for joining us, Phil Aldrich and David Finnerty. Now, we'll have, of course, plenty more from the UK shortly. Let's also now bring in Lizzie Burden, who joins us from the Labour Party conference in Liverpool. So, Lizzie, you also spoke to the Shadow Chancellor. What did we learn?
Well, she was making a clear pitch to our audience, the financial markets, that her Labour Party would be more credible in terms of handling the UK economy. She's calling for credibility, which echoes the call from economists like Simon French. Remember the Panmure Gordon. Remember the fiscal event on Friday was not accompanied by a forecast from the official fiscal watchdog, the Office for Budget Responsibility, even though the OBR said that it had time to make a quick assessment of the economic impact. Kwarteng said that that's coming later in the year. And so apart from the fact that these tax cuts, and we know now that more are coming down the pipeline because Kwarteng said so over the weekend, what's offensive to markets is the amount of borrowing and this credibility point. So Rachel Reeves really trying to hammer that home just now.
Lizzie, thanks so much. Lizzie Burden there with the very latest, of course, from Liverpool. Coming up, we'll have more on the UK, on pound plunging, including what sectors, of course, we should be closely watching after the fallout. Also, watch out for gilts. This is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
A weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The pound has plunged to a record low against the dollar after the UK Chancellor doubled down on tax cut plans. The decline follows the release on Friday of Kwasi Kwarteng's growth plan, which detailed the biggest tax giveaway in half a century. Asked about tax cuts over the weekend, he told the BBC there's more to come. Now, Giorgia Meloni has won a clear majority in Italy's election, setting herself up to become the country's first female prime minister. According to projections, her right-wing alliance, which includes Matteo Salvini's League and Silvio Berlusconi's Forza Italia, took about 43% of the vote. That would give the bloc at least 114 seats and a majority in the Italian Senate. A number of small protests have broken out in Russia against President Putin's conscription plans. This as fears grow that the Kremlin may ban some men from leaving the country. Over the weekend, people waited for hours in long lines at land crossings, including Finland, Kazakhstan and Georgia. Moscow attempted to reassure citizens, saying some will be exempt from being forced to join the army. A new poll over in the US says Democrats want the party to replace President Biden as its 2024 nominee. According to the Washington Post ABC News poll, just 35% of Democrats and Democrat-leaning independents want the president to be nominated. Meanwhile, 47% of Republicans and Republican-leaning independents want former President Donald Trump to be the party's nominee. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, let's have a look at pound, because I'm getting a couple, not many, but a couple of Twitter messages saying, why are you still implying that pound is imploding? It's off the lows. Yes, sure it is. But let's look at what happened overnight. Now, this was a very violent move. And I would suggest, as the Bloomberg copy says, so great is the turmoil in UK markets that there's now calls mounting for an emergency hike. And let's just remember, pound also tumbling to as low as 10350, an all-time low. Now, we have seen the pound plunge on the new UK Chancellor's words. That's in the last couple of hours. We've seen yields surge on the latest comments. So let's take a look at how the sectors have been performing. To help us analyze all of this is JP Barnett from our stocks team. So, JP, what are you looking at?
Well, I mean, we see the typical reaction to a move in a country's currency today and also on Friday. So if we look at the UK market, we see that the bigger index, the FTSE 100, is doing okay-ish. It's pretty much flat right now. It was a little bit in the green earlier today, but we see the wider FTSE 250, which has the mid and small caps in there, doing poorly, down 1%. So this is because we have much more export-oriented stocks in the bigger index. So we see in there industrials, consumer staples, consumer discretionary doing pretty well because they will be able to sell the products cheaper into Europe and on the globe with the pound plunging. While on the other hand, the small caps, you see pretty much the opposite. You see healthcare, you see real estate, of course, going down. You see utilities going down. Both sectors very sensitive to the rate level, and with the yields surging in UK gilts, that's not good for those sectors.
Yeah, so JP, are you also looking, of course, there's, as you say, a huge difference between the FTSE 250 and the FTSE 100. If the BOE hikes, what does that mean for sectors if they hike aggressively, even more than they have so far?
Yeah, of course. I mean, it basically will extend the story that we are seeing right now, that you see like those very rate-sensitive sectors, like especially real estate and utilities, being under pressure there. It might be good for financials because the rates level is probably increasing the net interest income, but financials are also very sensitive to FX movements, so it's probably not the greatest thing for them to have. Also, like we have a nice story out there this morning, like in general, that we see like corporations across Europe facing the highest cost for refinancing their debt. So if they hike aggressively, that won't be nice for UK companies.
JP, thanks so much. As always, JP Barnett there with the latest on UK markets. Now, Bloomberg Surveillance early edition continues in the next hour. Matt Miller and Katie Lyons are in New York. Anna Edwards is here in London. Of course, a lot of the focus will be on UK bonds plummeting after traders ramp up bets on the scale of interest rate hikes by the Bank of England. This is Bloomberg.
These floating flowers are made of 92,000 solar panels. Laid on the surface of a reservoir, they can generate 41 megawatts, which is enough to power 20,000 homes. It's one of the biggest floating solar plants in the world. Floating solar arrays have been gaining traction in Asia, including countries like Singapore and Thailand. Floating projects typically benefit from an easier connection to the power grid. They can also restrict algae blooms while keeping the solar panels cool. This one in particular has helped the local economy. When the power plant was first proposed, residents were given the chance to invest. Some locals were also offered jobs during construction. In fact, it was the community that requested the panels to be shaped as flowers to look more appealing. South Korea still relies heavily on imported fossil fuels, but will need to change that to reach its goal of becoming carbon neutral by 2050. Solar plants like this one may help the country reach its net zero goals.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
There's a lot of market turmoil.
The uncertainty is something that just continues to weigh on markets.
We're very much in flux now.
At the end of the day, it comes back to the dollar.
I think the UK is behaving a bit like an emerging market, turning itself into a submerging market.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. The pound sinks to an all-time low. Markets react after the British government vows to press on with more tax cuts. An historic election in Italy. Giorgia Meloni is set to become the country's first female prime minister and will lead the most right-wing government in the country since World War II. And the high price of war. The OECD slashes its global growth projections for next year due to the fighting in Ukraine and the impact of high energy prices. We'll be speaking to the OECD's acting chief economist this hour. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And it is here in the UK, Kaylee, that a lot of the market attention is focused. And through the Asia session, we certainly saw a lot of focus on the pound.
Yeah, you've seen a lot of focus on any UK asset for both today and, of course, Friday, which was really quite dramatic. And I would note that it was quite dramatic in Asia overnight, not quite as dramatic as what you are seeing where you are, Anna. But nonetheless, when you look at GMM, that function on the Bloomberg terminal, there is literally all red, not even a single green rectangle, or you're starting to see some when it comes to equity futures on the far right side of this if you are looking at on your terminal. But for our listeners on radio, largely it has been a down day for Asian assets. You were down in Hong Kong, China, big losses in Japan and South Korea and Taiwan. You had losses of more than 3%, and you had a lot of down pressure on bonds as well. Of course, that is something that really originates in the UK, but you saw bond yields moving higher across the Asia Pacific. Commodities down on the day, palm oil, iron ore, all under pressure. And of course, it all comes back to that foreign exchange story. Every single Asian currency weaker against the US dollar today. That includes the Japanese yen, the Chinese yuan, despite China trying to make it more costly to bet against the yuan in the derivatives market. And the South Korean won, the big underperformer in today's session, it is actually at its lowest level, weakest level since 2009 on that stronger dollar, Matt.
All right, Kaylee, we are seeing big red arrows here as well. Actually, not big red arrows, but we did see such big red arrows on Friday in the cash trade that futures looking set to fall even further is very bearish for this market. Right now, futures are off only 1/10%, but we fell to 36.93 in the cash trade on Friday. And I want to point out that the median estimate for a year-end finish at on the S&P this year is 4,300. So we need to rise basically another 15 to 20% to get to that level, and we don't have much time left in 2022. It's likely that you'll see those estimates coming down. The Bloomberg Dollar Index is one of the main reasons here. Another all-time high, and the chart really just goes parabolic at the end of last week. So 1344 is the level we're looking at, and for so long we were flirting with highs of 1313. You can see we just jumped 30 basis points from there. Right now, the U.S. 10-year yield also soared on Friday, coming up even further today, another 8 basis points, so 376, almost 377. It's huge, and the 2-year, of course, way over 4%. And NYMEX crude coming down below $80 for, I think, the first time since January, basically. So these asset moves have been really volatile, and a lot of it has to do with the mini budget that Kwasi Kwarteng came out with on Friday.
Yes, they're described as a mini budget. Didn't feel so mini in its delivery. More a maxi budget, as our colleague has been pointing out. This is the mixed picture then, Matt, we have across European equity markets right now. The FTSE 100 underperforming. The performance on smaller cap stocks, which have less global dollar earning potential, of course, that looks worse today because some of the large names in London flattered by the weakness in the pound. The FTSE mid gaining over in Italy, suggesting perhaps the market more concerned about what's going on in the UK, and we'll see this in the FX markets as well, than by what's going on in Italy politically. Let's have a look at that Italian story then. This is the FTSE MIB up by 1.2% this morning. We see some of the infrastructure plays in Italy. A bit of a sense of relief that things maybe have panned out as the markets had anticipated them at least to be. And we have also heard from Giorgia Meloni talking about governing with responsibility. The UK government, though, has continued to talk about tax cuts and focusing on growth at a time of inflation and high debt. And that has continued to concern the markets. We dipped down to 103 on the pound against the US dollar, and all of the talk is about whether we get to parity on cable. That was during the Asia session. We've clawed back some of that as European traders have got back to their desks. So we're now back up at 107, but still an options positioning, I should say, is a little more muted than parity, but certainly that is one of the areas of conversation. And here we have the pound selling off against the euro as well. So the euro continuing to gain despite that victory for a far-right alliance over in the Italian politics. Despite that, the market's very much more focused on what's going on in the UK, and this is a clear example of that, up by 53 basis points on 2-year yields here in the UK this morning, Matt.
Yeah, let's get to those moves that we've seen in the UK. Really our top story today, the pound, as Anna mentioned again, falling at 1 point to 103, an all-time low against the US dollar. Gilts crashing after the UK government vowed to press on with even more tax cuts. We've got team coverage for you. Bloomberg's Lizzie Burden is at the Labour Party conference in Liverpool, and Bloomberg's Danny Berger is covering the market reaction from our studios in London. Let's start with Lizzie Burden in Liverpool. Lizzie, is there a chance of an emergency hike from the Bank of England as we see the pound plunge?
Well, traders are pricing for that. They're pricing for 150 basis points of hikes by November, implying that we're going to get an intra-meeting hike, even before the pound's fall today, which of course is caused by the Chancellor Kwasi Kwarteng saying that he's going to add to the fiscal package from Friday with even more tax cuts funded by borrowing. Even before all this, on Friday, an analyst at Deutsche Bank was saying that the Bank of England does need to step in if it's to regain credibility. There are also questions about whether the Bank of England is going to reverse its or pause its active gilt sales to avoid overwhelming the market. But really, the question for Andrew Bailey is, after all the criticism of monetary tightening financing, is he going to want to react to fiscal policy in this way and be accused of taking his eye off inflation? Really, he may not want to add to the panic, but that panic is already there.
Okay, certainly seeing that in some asset classes today, Lizzie. And you're in Liverpool, of course, because the opposition Labour Party is meeting there, trying to formulate their line of attack to oppose the Conservatives' fiscal announcement. How are they trying to present themselves?
Well, we've just spoken to the Shadow Chancellor, Rachel Reeves, appealing to the financial markets, saying that they would present a more credible offer to the financial markets. Keir Starmer, the opposition Labour leader, over the weekend has said that he would not go ahead with the cut to the top rate of income tax. Remember, that was the rabbit out of the hat on Friday from the Chancellor Kwasi Kwarteng. But he would continue, Keir Starmer, with the cut to the basic rate of income tax, as well as spending on public services. So the big question at this conference is, how are you going to pay for all that? They also need to set out a clear, broad vision for how they would govern. And of course, there are divisions in the Labour Party right at the top. We're here in Liverpool where strikes are happening at the port, and at the top of the party, divisions over how they would handle strikes and unions. So it's an open goal for Keir Starmer, but he's got to sort out the issues in his party first. All right, Bloomberg's Lizzie Burden reporting from Liverpool. Thank you so much. And Lizzie will be joining us again later this hour with Pat McFadden, Shadow Chief Secretary to the Treasury. Now let's get more on the market reaction to what's going on in the UK. Bloomberg's Danny Berger has more on the fallout. And Danny, I keep looking at these charts of UK assets, wondering if these are really intraday charts. The moves are remarkable.
It is extreme whiplash, especially looking at something like sterling at one point cratering to an all-time low, falling more than 4.5% in the Asia market session. But now at the moment, the pound versus the dollar is weaker by only 0.7%. It's not even down one whole percentage point even more. And a lot of this is because during the Asian session, it was really only sterling that served as the release valve of this concern on the state of the UK economy. But with the cash market and bonds up in trading, that is where we're seeing the pain. This is a crisis of the bond market, really centered around this idea that at the moment, debt servicing costs have tripled to an all-time record. There's concern there with how the government is going to fund itself. I mean, 55 basis points worth of gains in the two-year yield. This is financial crisis level moves. We haven't seen gains of this since 2009. It's VAR shock. That's the kind of feeling we're getting from this bond market. Now, part of it is an aggressive pricing from the BOE. Lizzie was just going over this idea that they need to entice foreign buyers in. About a third of foreign buyers own the gilt market, so you need to do something dramatic to get them back in. But at the same time, is it just rearranging deck chairs because we have this issue of the government funding itself? I was talking to Martin Maloney of Alpha Book, who basically said the government and the BOE actually need to work in tandem. They need to be pro-growth together. Otherwise, they're just kind of opposing themselves, and it's going to be difficult, again, to get foreign buyers interested in and help back this new fiscal policy.
All right, the value at risk call is, I think, really interesting. The question is, are we going to start seeing hedge funds blow up, as a lot of them could have been on the wrong side of these trades? Danny, thanks very much, and thanks to Lizzie as well. We'll talk with her later. Now, Italy is on track to name its first ever female prime minister. Giorgia Meloni won a clear majority in Sunday's election. That sets her up to head the most right-wing government since World War II. Meloni spoke yesterday.
It seems clear to me that what came out from the first projections is that Italians in these general elections have expressed a clear indication that they want a center-right government led by Brothers of Italy.
Bloomberg's Francine Lacroix joins us now from Rome. So, Francine, take us through the results and tell us as well, you know, what does it mean, the most right-wing government? How do we gauge that?
Yeah, so we gauge by policies, and good morning to you, Matt. We gauge by policies. We gauge, of course, her stance on LGBTQ community rights. We gauge it on immigration. Some of the things that she said is certainly Italy first, and this is, I think, the concern for the market. So first of all, we have the first female prime minister. She hasn't been given, of course, a chance to form a government yet, but given her large win yesterday, it looks very likely. She is also in her policies a bit of an enigma, wrapped in a mystery, because markets have been hearing what they've been told by her and her insiders, which is basically that she wants to stick to the fiscal rules. She doesn't want to rock the boat. She will comply with the EU, but she also has to find money to try and, you know, alleviate the cost of living crisis, which is huge here in Italy. At the same time, because of some rhetorics coming from this far right, including her saying that actually she certainly didn't disagree in certain policy with Viktor Orban of Hungary, there's a question mark on whether she's ready then to fight with the EU. I have to say the market for the moment pretty placid. It looks like they believe her to her words that she will go forward, stick to the reforms initiated by Draghi, and get that 1.9 billion euros of money by the EU in December.
Yeah, Francine, she seems to be talking about behaving responsibly, about fiscal responsibility. The action, the focus for markets is in the UK, of course, today when it comes to these two European political stories. So how instructive is what's happening in Britain to Italy with its large debt pile and with markets watching their focus on responsibility?
Well, because, Anna, and good morning to you, of course, the polls were largely right in Italy. I have to say we've been texting with a lot of the sources in government, outside government, people here on set, and they've been saying, wow, look at the UK. Maybe this is a warning shot for Giorgia Meloni and her government. Remember, Giorgia Meloni would not govern her alone. It's with her centre-right alliance, which includes Silvio Berlusconi and Lega, but they haven't done as well as expected. And so some of the promises that they made in terms of course, tax cuts, in terms of spending more, may have to be revisited in the light of what's happening to pound. Now, these are two very different economies, and if you look at Italy, they don't really have any fiscal maneuvering. Their debt pile is huge, and again, they've done these agreements with the EU. So I've had more and more people coming on set saying, wow, look at the pound. The first question is, can you still afford an espresso if you're coming from London? The second one is, of course, maybe Giorgia Meloni is looking at what's happening in the UK and giving her a steer on how much she can push fiscal spending.
All right, Bloomberg's Francine Lacko reporting from Rome. I hope you can get an espresso before you join us again later this hour for an interview with Fabia Foy, head of research at Anima. But before we get there, let's get back to the U.S. markets now and take a look at some stocks moving in pre-market trading. Two of the big movers to the upside are U.S.-listed Macau casino stocks that have companies that have big operations in Macau after it said that tour groups from mainland China could resume as early as November. So that would give a big lift to players like Las Vegas Sands, which gets about 60% of its revenue from its Macau operations. It is up about 7.7%, while Wynn Resorts, also a big player in the gambling enclave, is higher by nearly 7%. Another group of stocks not doing as well this morning, though, include anything tied to commodities. You are seeing a little softness in the commodity complex, in part due to the stronger dollar, in part due to just growing concerns around demand as there is a deteriorating growth outlook. That means the energy select sector SPDR ETF, which is essentially a gauge of how the sector overall will do come the opening bell in just about 4 hours and 15 minutes time, is down about 0.5% before the bell, Anna.
Okay, Kaylee, lots to talk about then with Mark Haefele, CIO at UBS Global Wealth Management. What is his appetite for UK assets this time? What does he make of the big moves we're seeing higher in UK yields? And later this hour, paying the price of war. The OECD slashes its global growth projections for next year. We will speak with the organization's acting chief economist. That conversation coming up shortly. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
I think the UK is behaving a bit like an emerging market turning itself into a submerging market. It would not surprise me if the pound eventually gets below $1 if the current policy path is maintained.
Larry Summers there, former U.S. Treasury Secretary, speaking with Bloomberg's David Weston on Wall Street Week. Mark Hafela, CIO at UBS Global Wealth Management, joins us now. And Mark, I'd love to know what you think of Summers' characterization of the UK economy. He says, you know, since we've had Brexit, we've had fiscal policy and monetary policy mistakes that seem to make the UK look like an emerging market. Do you agree?
Well, if we're going to start with, you know, an economist in economic theory, let's start at the top and say what's going on in the UK probably proves that this modern monetary theory is hogwash and it doesn't work. Certainly, you know, post-Brexit, I think you were doing a comparison with Italy. You know, Italy's still part of the Euro and the European Union, but nobody really needs to invest in the UK. As a global investor, we don't need to invest in the UK. And you're seeing that play out in these markets. And the other thing we're seeing play out, you know, as now we've gone away from negative rates and the tide has come out a little bit, you know, we're seeing the way that this really starts to play out in currencies in particular, and that's going to be a real feature of the world ahead of us. So that's the macro. But then I'd say on the micro, when we aggregate up our stock exposure towards things like value, towards things like energy, we actually have a lot of stocks in the UK because, as you've said, you know, the FTSE, the larger cap stocks, are getting much of their revenues from outside of the UK. And so that might be a place for UK investors to look to hide from some of this turmoil.
I wonder if, you know, the UK has a lot of prestige. We care about the UK story more than we care about bigger economies like Germany because I guess they speak the same language as we do. They used to be a huge naval power, and so many bankers love living in London. Did they lose that? Has that all come out of the price now with the pound at 107?
Well, you know, I'm not going to bet against London, which, as you said, many people around the world have an enormous affinity for. But, you know, just look at what has happened to the price of real estate in, say, Frankfurt or in Amsterdam, and you get to a little bit of an answer to your question in the relative rebalance for bankers and financial centers, the financial center of Europe, you know, as we go forward.
Mark, good to speak to you today. Do you think the Bank of England needs to come forward with some kind of emergency rate hike? And what would the right size, if they're thinking about it, what would the right size of such a move be? Too small and it risks underwhelming? Too large? Does it look like panic and do damage to the economy? What would go through your mind?
Well, first, that they're in an extremely difficult spot. I'm not sure. Look, there's no one right answer because, as you've pointed out, and as many people have pointed out, this is an interplay of various forces that, you know, should probably in some ways align first and then act later, and that hasn't been happening. So what, as I said, you know, we can't predict exactly how they're going to try to navigate this. So we want to look for the areas, those companies that are getting their earnings from outside the UK, and bet on the sides of this where we're a little more sure of what the outcomes are going to be.
More broadly, some of the things you're looking at in terms of market strategy at this point, Mark, you're talking about positioning for security, and that's not just defense, that's security around all things, around environment, around food security, technological security. Where are the opportunities there?
Well, look, that's absolutely true, and I think over the longer term, looking towards sustainable sources of energy, that's if you look at China, that's clear government policy supporting that area of the market. If you look at what's going on in the U.S., there's more government support for that. Same thing in Europe, and so over the longer term, that kind of security is going to be a key role for investors who are looking to bottom fish a little bit. For us, now security absolutely involves energy, and it's going to be a very interesting year for Europe as these gas supplies start to run low in, say, February and March. I think that Mr. Putin is looking to test that unity in Europe, and that's going to be a critical juncture as we go forward over the next 6 months.
How much security or safety are you looking for in cash, Mark?
Well, I think that we've got a new world now where you can actually get something of a return on bonds, and so we are overweight high-grade bonds here in the sense that we think it can provide some cushion and ballast in a portfolio in these turbulent times. We're overweight the dollar and the Swiss franc as safe haven currencies. I think Switzerland has the capacity to and the will to meet inflation. And the U.S., is in this scenario where because there is inflation, but there still is a lot of growth, the Federal Reserve can and will speak very hawkishly going forward and continue to act. And then the dollar in here, of course, has that geopolitical hedge in the sense that the U.S. remains independent of the energy woes that are going on in Europe.
Yeah, and we just continue to see the dollar going from strength to strength at the same time that we're seeing rates climb higher and higher. Many of us thought the high of the year may already have been in on treasuries. Clearly, it was not. We're at 377 almost this morning. Is your year-end forecast still 3.5? And what gets us back down there when the trajectory all around the world seems to be yields up?
Well, you're right. I mean, I think that we see some breaks on how high this can go. Obviously, there's many factors in flux, but if inflation starts to roll over and some of these Fed rate hikes start to take effect, which we will, we've seen areas of weakness starting in the United States, say around housing, and as that has an impact, that should slow even further expectations for future inflation and also expectations for how much growth is going to be on the other side of these Fed hikes. And so both of those can act as a brake on how high the 10-year goes.
We saw the market, the S&P drop to less than 3,700 mark on Friday. That means we have to climb more than 16% to get to the median estimate that strategists have for the S&P at year end. Do you think we're going to start seeing those estimates come down, or is it likely that stocks can rally back up that high by the end of 2022?
Well, I'm very pleased that we've for some time taken the under on that. We're at 3,900 at the end of the year, which admittedly today seems optimistic. Look, I think that this goes, whether it's CPI print or other data point by data point around what the Fed is going to do. This Federal Reserve is not driven in a formalistic, mechanic way on their next moves. And so that creates a lot of speculation and flexibility what their reaction function is to every data point. Now we've seen that as this inflation has persisted, we think the risk of inflation and a soft landing has come down a bit, and that's reflected in our end of the year pricing.
All right, well, we have just about 3 months to go. Mark Hayfole, CIO of UBS Global Wealth Management, thank you so much for joining us. And later this hour, we will talk about paying the price of the war in Ukraine as the OECD slashes its global growth projections. We'll speak with acting chief economist next. This is Bloomberg.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone. Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball so their apps will surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are in Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The pound sinks to an all-time low. Markets react after the British government vows to press on with more tax cuts. An historic election in Italy. Giorgia Meloni is set to become the country's first female prime minister and will lead the most right-wing government in Italy since World War II. And the high price of war. The OECD slashes its global growth projections for next year due to the fighting in Ukraine and the impact of high energy prices. We will speak to the OECD's acting chief economist next. Welcome back to the program, everybody. I'm Anna Edwards in London, Matt Miller and Kaylee Lyons in New York. And Matt, of course, risk assets here in Europe under pressure, quite a lot of contagion from the UK story.
Yeah, absolutely. And although you see some pockets of green there in terms of the equities trade, that is not what we see here. S&P futures continuing to fall now further. Remember, just 30 minutes ago, we were off 0.1%. Now we're down about 0.6%. And this after closing below 3,700 in the cash trade on Friday. So big concerns in terms of risk assets continuing into the start of this week. Part of the reason is the Bloomberg Dollar Index. Right now at 1344. Remember, we were pushing around 1313 for an all-time high. Now we've just gone parabolic here. And it's surprising to me that even with this huge gain in the dollar index, you don't see a bigger drop in Bitcoin. I saw it a second ago, but it's gone now. In any case, Bitcoin, $19,100. It doesn't matter as much as these other assets. These are more important, obviously, to focus on for the broader market. The 10-year yield up to 377. Unbelievable moves. It's not just UK assets that are getting whipsawed around, or rather just moving violently in one direction. US assets as well. I mean, these yields are incredible. NYMEX crude as well, below $80 a barrel for the first time since, I believe, January, maybe February, but the first time since the beginning of the year. So this shows real concern that the demand side of the equation is going to come under real pressure. Kaylee, what do you see in terms of the pre-market movers?
Well, to your point on demand concern in commodities, you are seeing some commodity-sensitive stocks under pressure in pre-market trading, including in the energy complex. ConocoPhillips is down right now by about 0.4%, while Freeport-McMoRan, a material stock, is down by about 1%. There are some big gainers out there this morning, though, including U.S. casino companies listed here in the U.S., but have big operations in Macau. The likes of Las Vegas Sands, which gets about 60% of its revenue from Macau, is up about 6.8%, while Wynn Resorts is up 6%. Of course, the news there is that Macau has said tour groups from mainland China may begin resuming again come November, Anna.
And Kaylee, let's have a look at the European picture then. Nervousness around risk assets down by 0.6% on the Stock 600. So earlier optimism around the FTSE MIB certainly being eroded a little bit, but still positive. That is one area of green. Broadly speaking, though, we are weaker across European stocks. Nervousness about the fiscal picture in the UK. That's the main point of concern right now. 107.54 on the pound. It went down as low as 103, a new all-time low post-decimalisation for the pound. That was during the low liquidity of the Asia session. It's clawed its way back a bit, but still off by 1%. And here's another illustration of that move in UK assets. So we're down on the pound. UK yields going higher and a 50 basis point jump in the 2-year. And yes, Kaylee, that is just in one day.
Absolutely remarkable moves. And we've also gotten some moves from the OECD. Anna, it has slashed its global growth forecast for next year, saying the world has been jolted by the war in Ukraine. The Paris-based organization says the global economy will expand just 2.2% in 2023. That's down from its previous forecast of 2.8%. And it also says that inflation will still have a 6 handle for the G20 economies next year. Joining us now to discuss is the OECD's acting chief economist, Alvaro Pereira. Alvaro, thank you so much for being with us. You say in the report that due to those persistent inflationary pressures, central banks need to continue hiking interest rates. At the same time, supportive fiscal policy is needed to help cushion the blow of higher energy costs. What is the proper balance of that, given we are seeing today the impact of fiscal policy plans in the UK absolutely roiling assets across the board?
Well, good morning. Our forecast certainly is a challenging one because we are forecasting a significant slowdown of the economy to, say, the United States growing at 0.5% next year, the euro area growing 0.3%, and still a slowdown in China this year and next year recovering a little bit, but still, globally, we're talking about significant slowdown. We believe that right now the priority has to be, for sure, bringing inflation down. It's crucial because real incomes are going down quite significantly, and delaying adjustments would only mean that we're going to have problems down the line and probably even bigger adjustments to be made. So that's why we say very clearly that first of all, monetary policy should continue to tighten in the advanced economies. Also in the emerging markets, it's crucial that it's still early to undo the tightening that took place a bit earlier. So likely they'll have to continue to tighten a little bit. And together with this, it's crucial that fiscal policy works hand in hand with monetary policy so that fiscal support is targeted and temporary, but also without leading to a substantially further stimulus into the economy, because a lot of economies have high debt levels, and it's not prudent to do so.
Well, and of course, there still remains a big energy question hanging over both monetary and fiscal policymakers. How do you model out the uncertainty around energy in economies like Europe, and what kind of downside risk it could pose to growth and upside risk it could pose to inflation?
Well, we have a scenario, in fact, that calculates this. So first of all, it's important to realize, especially for Europe, what are we talking about? So just to give you an idea, storage levels right now in Europe are about 90% in most countries. But storage levels, the capacity is only 110 billion cubic meters, whereas an average consumption during winter is about 290 billion cubic meters. So we're talking about the substantial gap. So even though many countries are trying to bring more supply to the fold, this likely will not be enough. So what we calculate is that we need to reduce demand between 10 and 15% in Europe in order to avoid gas disruptions. But we have a scenario that shows exactly that if we have gas disruptions and energy prices, especially gas prices, go up by 50%, what is the impact for the world economy? Well, we calculated that for Europe, for example, growth would be even lower, will be 1.3 percentage points lower than the already very low 0.3% growth forecast that we have in our central scenario. So basically, Europe will be in a big recession, or at least in a recession. On the other hand, we would have additional inflation of about 1.5% in Europe, and in fact, around the world, 0.5% more. So we're talking about the scenario in which if we have big energy disruptions, we would end up with even less growth and likely a recession in many countries, at the same time, more inflation.
Okay, good to see you, Alvaro. There are clearly big global forces at work here. There's also domestic decision-making to be done. We sit here a few days after a big announcement from the UK on the fiscal side. How concerned are you about the trajectory of UK fiscal policy?
Well, first of all, because the mini budget came on Friday and this was not still incorporated, and we don't know all the parameters. This was not incorporated in our forecast. So I should say that is important to say. Secondly, we believe that we reiterate our policy message. I think monetary policy needs to tighten now. And just to give an idea, right now we calculate that 80%, well, inflation is growing at, or prices are growing at more than 4% in 80% of all goods and services in the UK, which is higher than the euro area or higher percentage than in the United States. And on top of this, we believe that is quite important that, as I said, monetary policy works hand in hand with fiscal policy. So we reiterate the message. We believe that it's quite essential going forward because otherwise the adjustment and inflation rising will be likely higher.
Although, Alvaro, we see, it seems to me, around the world, monetary policy working at cross purposes with fiscal policy. In Japan, in the UK, in the US, it seems that central banks are trying to make up for government moves.
Well, we believe that, again, we reiterate our message. We understand what is at stake here. We also understand, for example, in many countries, not only Europe, but also in Asia, energy prices are going up fairly dramatically. So there is the need to support especially vulnerable households and potentially some sectors. But we think that is very important. If we want to get the job done as quickly as possible without big disruptions down the line, is absolutely essential that monetary policy and fiscal policy work hand in hand. But, give an example. Japan right now is a bit different case because Japan inflation, even though is rising a little bit, is still very low level right now. So we understand the position of Japan. Of course, other countries like China, they don't have a lot of inflation right now. So there, the fiscal stimulus is working its way and will work its way a little bit next year. So it really depends on specific economies. But overall, in many countries around the world, monetary and fiscal policy should work hand in hand so that we are not able, we don't get into a situation in which things get a bit more uncomfortable for all of us.
Thank you so much, Alvaro. Good to see you. OECD's acting chief economist, Alvaro Pereira. Thank you for your time. Coming up on the programme, a new government in Italy. Giorgia Meloni is set to become the country's first female prime minister as Italy tacks once again to the right. We're live in Rome next. This is Bloomberg.
Stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York, Anna Edwards with us out of London. Giorgia Meloni has won a clear majority in Sunday's Italian election, setting herself up to become the country's first ever female prime minister. Let's get back to Bloomberg's Francine Lacqua in Rome. Francine?
Hi, Matt. So this will then depend on what Giorgia Meloni uses as coalition. For the moment, she gave one speech after her victory. It's, almost 95% sure that she becomes prime minister. And she was saying we need to stay the course. So to ask all about this coalition building and what her priorities will be for the budget, we're joined by Fabio Fois. He's head of research at Anima. Fabio, thank you for joining us. If you're in Giorgia Meloni's shoes right now, what kind of clear message would you give to markets?
Well, I think the message for markets is very simple. For the time being, in the very short term, just stay a little bit on the side. Let's see how things develop. We learned something very important from the result of the election of last night. So the center-right won the election, fine, but the composition of the coalition that will lead Italy for the coming years is on the margin less sovereignist than it was before. Because if on the one hand we have Giorgia Meloni, brother of Italy, right-leaning, we have Liga, who did very poorly in the election. So on the margin, I think this coalition is slightly more pro-Europe than market had expected. However,
but Fabio, yeah,
please.
The problem is that they need to square the circle of there's a huge cost of living crisis. So they need to give money to the people that need it most, but they've also promised tax cuts.
Yeah, that is correct. That is correct. I think that they will try to deliver some of the fiscal easing they promised during the electoral campaign. In a way, they have room to find the resources needed to fund some of those measures. For instance, the entire center-right coalition is very much against the reddito di cittadinanza, so the universal income. That costs a lot of money to Italy every year, something like north 10 billion. If you cut that measure, then you have space to do something to deliver on some of the promises you made, in the status quo level. I think it's important also to bear in mind what Giorgia Meloni has been saying during the electoral campaign. She doesn't want to have a confrontational approach with Europe. She said, for instance, differently from Matteo Salvini, she said, well, I'm not in favor of expanding the budget because I'm well aware that Italy has its own issues with debt. I think these guys, they know very well that they need the protection from the ECB to be protected, to be eligible to for the TPI program. Italy must comply with PNRR policies, milestone and target, and also must have sound public finances.
Fabio, this is, I think, an important point, right? Because a lot of people have been saying center-right. We see that in a lot of European nations with no problem. Indeed, core nations like Holland and Germany have had center-right coalitions. Others have said the most right-wing, majority since World War II, which sounds scary. It sounds like Hungary or Poland, right? They've had real problems with the EU. Which is it, and how is the EU going to deal with this government?
Well, I think that the EU will be very pragmatic as much as Italy will be very pragmatic. So long as Italy comply with the request of Europe, so in particular with the milestone and the target of the RRP, I think that the relationship will be decent. Going into the budget, there might be some tension, but at the end of the day, I think that this tension will be fixed for one very simple reason. If Giorgia Meloni looks around herself, she finds two guys, Silvio Berlusconi and Matteo Salvini, who tried in the past, to be confrontational with Europe, and actually, it didn't really work out very well for their political career.
All right, Fabio, thanks so much for joining us. Really interesting stuff. Great to get your insight. Francine Lacroix as well. Excellent coverage there from Rome. We will continue to cover the Italian election results, but we're also going to focus in on the UK. Pat McFadden, the shadow chief secretary to the Treasury, joins us after the mini budget that we saw released from the Conservatives, Kwasi Kwarteng, on Friday, drove the pound down at one point to $1.03, the lowest ever. This is Bloomberg.
Very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much the consumer is paying them, and so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value, and the kind of transparency that they want.
Are you seeing a labor shortage right now, and what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons in New York. Let's get back to Bloomberg's Lizzie Burden, who joins us from the opposition Labour Party conference taking place in Liverpool against a backdrop of market volatility then, Lizzie. And you're joined by Pat McFadden from the Labour Party.
Indeed I am. Thank you, Anna. Pat, thank you very much for joining me and making time for me. Pat McFadden, Shadow Chief Secretary to the Treasury. The pound's tanked this morning after the Chancellor Kwasi Kwarteng announced that he's going to do even more tax cuts on top of all the fiscal announcements on Friday. What lesson does your party draw from this experience in markets? Will it be instructive as you set out your plans for spending and borrowing?
We were very concerned on Friday about the scale of the package and the fact that it was entirely to be funded through borrowing at a time when inflation was already high and there was already pressure on the Bank of England to raise rates. Both the package itself and the Chancellor's comments since then appear to have resulted in this very adverse market reaction where the pound, to use your word, is tanking. And there's another effect also playing out, which is that the cost of gilts is increasing now above 4% in markets this morning, very significantly ahead of where they were a short time ago. So not only are we increasing borrowing, but we're making the cost of servicing that borrowing more expensive. This is a risky time for the UK.
So what level of yields is needed to attract foreign investors to UK markets?
Well, I wouldn't pick a number, but what I would say is people need to have confidence and stability. And what we've got is instability. We had a chancellor who stood up on Friday and took everything that the Tories have said for the last 12 years about debts and deficits and set fire to it in public and described it as resulting in a vicious cycle of stagnation. So you had this huge policy flip-flop, which was not accompanied by a report from the Office of Budget Responsibility to let us see what the overall macro effects of that would be. You had the sacking of the permanent secretary, and you've got this tug of war going on between the government and the Bank of England. The metaphor that's been used is the government putting its foot on the accelerator, the bank putting its foot on the brake. That doesn't lead to a stable situation.
So Kwesi Kwarteng's backing the financial sector. He wants to achieve 2.5% annual growth. He's lifting the cap on bankers' bonuses to stop the exodus to Europe. What's your offer to the city?
Well, I used to be the Labour Party's spokesperson on city matters, and I think the financial services sector is hugely important to our economy. It's a huge wealth generator, it's a huge source of tax revenue, it's a huge source of employment, and it also gives us an edge that many countries in the world don't have. So I just wish there had been a modicum of concern for the importance of that sector when the government forgot all about it when it negotiated its Brexit trade agreement, completely leaving the sector out, not making any priority of it at all, and not showing any concern for its market access in future. So I do think the sector is important, but I think the importance of the sector is about more than things like the bonus levels of the richest people working in it.
So we've got chaos in UK assets. The eyes of international investors are on your party to see what you might offer as an alternative. What do you tell international investors that you stand for?
Well, I think as the markets are reacting to what the government has done, the public will look more to the Labour Party. So this week is a really important week for us. And we want to ensure the public that they can trust the Labour Party to run the country responsibly. So when we announce policies, we like to say how they'll be paid for. We like to have a balance between the tax revenue raised and the borrowing that any government has to do to fund things in a more balanced way, and also to project institutional stability. This is hard to quantify, but it's really important for countries. I think the Conservative government has played fast and loose with our institutional stability. We're going to need more of that in the future.
Pat McFadden, Shadow Chief Secretary to the Treasury, thank you so much for joining me. Anna, back to you.
Lizzie, thanks very much. Thanks to Lizzie Burden at the Labour Party conference, and to Pat McFadden there. And really stunning to look at the moves that we're still seeing in these bond markets, gilt yields on the rise. And Matt, you were mentioning what's happening with treasuries, so sort of linked, not linked, these stories, of course. This is having ripple effects across the Atlantic and around the world.
Yeah, absolutely. And the question is, does it continue? If so, do we see some big blow-ups? I mean, these moves have been absolutely massive in assets, Kaylee, that are traditionally very stable, right? So if you take the other side of this bet, you may not expect to blow up.
It's just anything but stable. The 2-year gilt yield is about 100 basis points higher today on this Monday than it was at the end of the day Thursday. Anna, it is just astounding.
Yeah, that is it for the early edition. More surveillance is ahead. Tom, John and Lisa will keep their eyes on the gilt markets and all of those markets on the move in response. This is Bloomberg.
we anticipate that you will have regulations clarifying what the SEC is going to do on cryptocurrencies and related kinds of things in the near future?
It's pretty clear that many of these tokens may be securities. What we've asked the trading platforms, the lending platforms, the other various venues to come in, to work with us, to get registered under the securities laws, because if a platform has 50 or some of them 500 tokens on their platform, probabilities are they're not all non-securities.
Now, there's another issue that has arisen, which is called gamification, which is to say people are making a game out of trying to buy stocks. Are you worried about this phenomenon?
We live in the 2020s in a new digital age where applications on our phones can use massive amount of data and then predict our behavior. What do we do when the digital algorithms are maximizing for the company's revenues rather than our returns? And so we're trying to think that through. It's not just gamification, it's a little bit more than that. It's whether there's a conflict between the app and our investment returns.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Uncertainty really is approaching those critical levels.
The uncertainty is something that just continues to weigh on markets.
The Fed message is clear that they cannot and will not wait for the supply side to move favorably, that they're acting aggressively now.
We still expect the Fed to moderate the pace of hikes once it becomes clear that the labor market is beginning to topple over.
Stop looking for the Fed to be your friend. Stop looking for Powell to say something conciliatory. He's not.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
What a messy Monday. Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Futures lower 0.8% on the S&P. TK, it's all about this FX market.
It's about the foreign exchange market. We're going to dive into this and take the pro conversation, folks, and try to translate it into English. Here's a tweet just in. Hey, is Farrow paid in sterling? John?
Paid in dollars, Tom. Luckily.
Good. That's why he's smiling.
Some sterling bills to pay.
Smiling this morning. John, I'm old enough to remember this. I never could do the math, but we're going Dickens this morning. John, sterling has elements of the early 1970s, back before decimalization. And my math this morning is £1, not even a shilling, John, 2 pennies. 3 farthing.
A different time, Tom. 103.50, the lows of the session. Bramo, what a move.
And right now the market is pricing in a 50% chance that you're going to see parity on the pound with the dollar by year end. Talk about just a complete shift in fortunes. But it highlights a problem that is most acute perhaps in the United Kingdom, but that's global. How does the rest of the world deal with King dollar at a time when the economy globally is deteriorating, at a time when energy bills are crimping the potential growth of nations worldwide, and when a Federal Reserve is dead set on raising rates?
I refreshed the year-to-date moves on the dollar against G10.
Insane.
Sterling down 20% against the US dollar this year. The yen down 20% against the US dollar this year. The Swedish currency down almost 20%. The Norwegian currency down about 17%. The Swiss franc is the relative winner. It's down about 7% against the dollar this year, and likewise the Canadian dollar. These moves are huge, Bramo. They are massive.
And they are destabilizing. And we're starting to see the destabilizing aspects of this, which is the reason why so many people are concerned about some sort of currency crisis. And it's good that you mentioned the yen and the yuan in China and the renminbi, given the fact that there's increasing concern they will not be able to control these moves without more drastic action.
John, what's important here is they do the cross rates. Let's explain this quickly because we got to keep the show moving. doing? You take sterling, the beleaguered, idiosyncratic like Turkish lira, and you run it against something that's equally as beleaguered. So I took sterling against a Korean won. John, it's 3.8, almost 4 standard deviation strong won. That's a definition of instability.
You can throw in euro sterling as well, Tom.
Yes.
Over the last month.
Yes.
Not pretty. Europe's in trouble, and still pound sterling is weaker. You got the bow tie sorted? I think we're sorted out. You look good, TK.
I'm not back from London.
You ready to go? Let's go. Futures down 0.8% on the S&P. On the Nasdaq 100, we're down 0.6%. We should do this in a commercial break, Tom. Maybe not live on air. Yields are up 9 basis points on a 10-year, 377.68. And it's not just the long end; it's the front end too. Your 2-year has been climbing for 13 straight sessions. Yields up another 10 basis points. Lisa, your 2-year, 430.
And just to put this into perspective, last week we saw more than 500 basis points of rate hikes globally from central banks. Just to give you a sense, this is an unprecedented, coordinated global tightening, the likes of which we have never seen before. And this is the reason why people are watching the political moves with that much more attention. What is the response as people start to feel the bite of those higher rates in addition to higher energy prices? And today, French President Emmanuel Macron plans to present his budget to Parliament. And this comes as you have seen energy prices in France come off the recent highs in tandem with the rest of Europe, but still incredibly elevated relative to where they've been historically. And this really raises the issue and the reason why people are watching the UK, people are watching Italy, and seeing what's the political response. How much do some of these governments want to crimp growth in order to save their budgets, in order to preserve their fiscal backdrop and the picture for foreign investors? And this really is highlighting the fraught moment in this regime change when it comes to an economic perspective, but also a political one. 9 a.m., the ECB's Christine Lagarde is planning to speak before European Parliament in Brussels. I'm watching the Italian 10-year yields, and yes, this is because of the election, but also you talk about closing the spreads, right? I mean, John, you were talking about how the ECB said, Christine Lagarde said, it's not our job to close the spread, the gap with Italian yields and German yields. Italian yields blew out, and guess what? It was her job to close the spreads. Well, how much does this become complicated at a time when there's increasing political skepticism and concern about how people are arranging their budgets? And today, who isn't speaking from the Federal Reserve? Well, Jay Powell, but everybody else seems to be. Boston Fed President Susan Collins at 10 a.m., Atlanta Fed President at noon, Dallas Fed President Lori Logan at 12:30 p.m., Cleveland's Loretta Mester at 4 p.m. This all has to do with the dollar. How many of them start to talk about, John, the concern that a strong dollar is going to torpedo the global economy, that this is going to come back on the U.S.? We heard from Raphael Bostic of the Atlantic Fed over the weekend. He said he still sees the possibility for a soft landing. Does that start to become a little bit, I guess, more obsolete in the conversation?
Can you imagine just a week, not even a week after Chairman Powell delivered that news conference, they start backtracking because of moves in foreign exchange?
I can't imagine that they would, because right now it's not hurting the United States. And if they did that, it would muddy the message and muddy the credibility of this Fed more than it would help the backdrop from a foreign exchange perspective.
John, you know, I know we got to get to Russ here, but standard deviation analysis is in order, and these are huge, huge moves in everybody's history as they do react to substantial FX instability.
Let's get to Russ Kostrick right now, the portfolio manager for the BlackRock Global Allocation Fund. Russ, I'm trying to work out when Rick and Bob get on the phone some Monday morning, the call goes around and they say, back up the truck, let's buy these bonds. Russ, are we close to that moment yet?
Oh, good morning, Jonathan. Look, I think actually you're probably closer to buying bonds than stocks, if that's any consolation. You know, we've had this enormous move, and, you know, one of the things we're talking about nominal yields all the time. Let's talk about real yields for a moment. You look at the 10-year. As recently as March, the 10-year real yield based on the TIPS market was negative 1%. Check this morning, you're about 130, 140. That's the highest since 2011. Now, granted, we've got a very different inflation environment back then, but what is interesting is that for the first time in years, you can actually carry some yield in a portfolio with bonds, particularly with the short end of the curve. So, look, this is a hard market. Bonds are not acting as a hedge, but you are starting to get to levels where the income is becoming a little bit more interesting.
So we're going to hear from a whole host of Fed speakers today, Russ. Do you expect them to push back on some of the hawkish rhetoric and some of the response in markets because of the strong dollar and because of what that does internationally?
I'm not sure. You know, the reality is the Fed was pretty resolute in the last few communications. I think there was no doubt left in anyone's mind after last week, after Jackson Hole. And again, we know what the Fed is looking at. They're looking at the labor market. They're looking at end user demand. And while we have seen some softening and some deceleration of realized inflation, it's just not obvious, given how intense they're being about this, that there are enough signals, enough all clear signals, that they're going to give the market a break in the near term. I completely agree. The dollar is a challenge. In addition to this surge in real rates, we're seeing the dollar adding to the tightening financial conditions. And if you want to know why risky assets are down as much as they are, you don't have to look much further than the Fed in this very rapid shift in financial conditions.
Russ, what's the trigger where you go all in? Where you basically said, you said we're close to buying bonds, closer to buying bonds. What's the trigger to let's go?
Well, I guess the thing is there never is that trigger. This is about a continuous change rather than a discrete. So we were much more underweight bonds a year ago than we are today. We're still underweight bonds relative to our benchmark. We've closed a lot of that gap. In terms of, what are some of the milestones? In terms of the short end, I think you're already getting a pretty good yield. If you think about the long end, one thing to consider, typically long end yields have peaked just about where the terminal Fed funds rate is. We know from last week, the terminal Fed funds rate, we're probably not there yet, but certainly as we get to 4% or over that, as we get closer, then maybe think about closing some more of that underweight, closing some more of that gap.
A bit of a mea culpa from Chris Harvey and the team over at Wells Fargo, just publishing just moments ago. Here's the quote for our audience. Our belief that we would not retest the 22 low until the first half of 23 was wrong. Despite retesting the lows, we feel the market bottom has not been established and stocks will make newer lows, lower lows in 2023 as EPS estimates come down and the Fed tightens into recession. Russ, that's the next leg for a lot of people, the next shoe to drop. Do you think we've seen enough of that? Earnings expectations come in?
Probably not. If you look at where earnings estimates are for next year, you're still getting, modest growth. Is that consistent with a slowdown in the economy? Look, I have some sympathy for the notion that the next leg for equities is probably more about earnings estimates and about revisions than it's about the multiple. The multiple's already come down a lot. Now, granted, if inflation stays sticky, there's room for more multiple compression, but I would be more worried about the earnings side. One of the things we are doing in the portfolio, we're very underweight equities, but the equities we do have, we're emphasizing earnings consistency, margin consistency, profitability, because these are the characteristics that I think are going to be challenged in 23 with the economy slowing.
Hey, Russ, thank you, sir. Good to kick off the week with you. Russ Kostrick there of BlackRock with equities down, Tom, and yields much higher.
Yeah, I haven't got time to get to it yet. There's so much to look at. It's such a rich moment, folks, and truly currency history being made. George Saravella's publishing moments ago. We'll get to that. John, the VIX, 32.56. We've come out over 30. I'm doing some studies on it and that. But the question, John, is there catharsis out there? And to the Harvey note, I don't sense the catharsis from, say, Thursday through to where we are now.
What's the Chris phrase, Tom? The cathartic puke that Chris Harvey would look for over at Wells Fargo.
Well, that may be, that's not CFA talk, but,
That's his phrase, not mine,
I know,
Lisa.
no, I know. But
they don't use catharsis with a CFA.
When I say that phrase, people are like, that's so unladylike.
What's wrong? Are you serious? Is that what people say to you?
Oh, yeah.
That is absolutely ridiculous.
How could you? It's really crass in the morning. But I agree. It's a cathartic puke that we're looking for. No, I agree.
It's a gender-neutral term. Futures down 9 tenths
Everyone's
on the S&P.
puking
On the Nasdaq, exactly. Down 0.6% on the Nasdaq. On the S&P, down 8 or 0.9% on the S&P. Yields are up 8 basis points on a 10-year. The 2-year climbing for a 13th straight session. The last time the 2-year yield had a down day was September 7th, and the yield was 343. Right now, it's 428. Live from New York, looking forward to covering these markets with you on TV and radio for our audience worldwide. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In the UK, concern about Chancellor Kwasi Kwarteng's fiscal policies has sent the pound plunging to an all-time low. Sterling fell below $1.04 at one point after Kwarteng said there is more to come on tax cuts. There are fears that cutting taxes even more will send inflation and government debt soaring. The OECD has slashed its global growth forecast for next year, saying the world has been jolted by the war in Ukraine. The Paris-based organization says the global economy will expand just 2.2% in 2023. That's down from its previous forecast of 2.8%.
The OECD also expects further interest rate hikes. Italy is on track to have its first female prime minister. Giorgia Meloni won a clear majority in Sunday's election. That sets her up to head the most right-wing government since World War II. Meloni emerged from the political fringes after leading the opposition to Mario Draghi's technocratic administration. There's growing speculation that Russia may restrict its borders to keep men eligible for the mobilization from leaving the country. Russian men and their families flocked to borders over the weekend. Witnesses reported hours-long lines at Moscow's main airport and at land crossings. A new poll says most Democrats want the party to replace President Biden as its 2024 nominee. According to the Washington Post ABC News poll, just 35% of Democrats and Democrat-leaning independents support the president for nomination. Meanwhile, 47% of Republicans and Republican-leading independents want former President Trump to be GOP's nominee. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but you know, some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Policy, politics, from the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays. Fed makes its call.
A unanimous Fed raises the benchmark rate 75 basis points.
Bloomberg is there with live coverage.
We anticipate ongoing increases will be appropriate.
The market's responding to this, as you might expect.
And instant expert analysis.
Do we want this Fed to force a recession?
They are saying that forward guidance is dead. It is very not dead.
We keep being surprised at how durable inflation is.
The risk is skewed to doing too much.
They're choosing the lesser of two evils.
Nobody covers the Fed like Bloomberg, your global business authority.
What I'm determined to do as Prime Minister, and what the Chancellor is determined to do, is make sure we are incentivising businesses to invest, and we're also helping ordinary people with their taxes. And that's why I don't feel it's right to have higher national insurance and higher corporation tax, because that will make it harder for us to attract the investment we need in the UK. It will be harder to generate those new jobs.
Let's trust the UK Prime Minister on CNN over the weekend. Live from New York City, good morning. Just some monster moves in this market. Let's start with equities. We're down 0.8% on the S&P. On the Nasdaq 100, we're down 0.5%. Yields are higher on a 10-year Treasury by 7 basis points, 375.87. Euro dollar, still not used to this, 96.48, with negative 0.4%. This, though, nothing like the moves we're seeing in sterling and in gilts. £10 sterling a little bit earlier this morning, trading right now with a 107 handle, this morning at 103.
And still 107 is a shock, and 103 takes us back to the early 70s. John, we aim to please off the terminal. You mentioned euro sterling, of course, incredibly important for both Europe and the United Kingdom. I was stunned. You nailed it, John, and I didn't realize the move. This is the kind of thing that gets the IMF going. This is the kind of thing that gets the New York Fed desk in New York going. 5 standard deviations out on euro sterling, strong euro. That is extraordinary. I've never seen that, John.
Unreal, Tom. Just unreal.
Yeah.
Joining us now is Lizzie Burden over in Liverpool. Lizzie, you're at the Labour Party conference, I'm told. Can you tell me whether every MP there has now got the Bloomberg app and a live feed of where sterling is trading?
Everyone that comes past and chats to me is asking me where the pound is at. So they certainly are not ignoring the markets, despite Kwasi Kwarteng, the Chancellor, saying that the markets will do what they will. I was speaking to the Shadow Chancellor, Rachel Reeves, earlier, and she was making a clear plea to the financial markets that the Labour Party can be trusted if they are the next government. And it's the same message from Pat McFadden, the Shadow Chief Secretary to the Treasury, that they would be more credible. They're trying to set out their vision if they were the government, but we really need to be convinced that they can afford all the plans that they're setting out, as well as all the public spending, because of course over the weekend the Labour Party said that they would carry on with the proposals from the Tory government, including specifically the cut to basic income tax and the reversal of the rise in the payroll tax. They'd scrap the top rate cut, but they're very expensive pledges that they're making.
Lizzie, given we've also got the Conservative Party conference later on as well this week, can you tell me how united that party is behind some of these moves by their government?
You're stirring mischief here, John. This is what we're waiting to see. Will more of the Rishi Sunak faction, who of course ran against Liz Truss to be the leader, pipe up? We've already heard from John Glenn, a Sunak ally from their time together at the Treasury, saying that he disagreed with these plans. You also had, I spoke to Mel Stride, the chairman of the Treasury Select Committee. He was Rishi Sunak's campaign chief on the morning of the fiscal package on Friday. He was saying that the Office for Budget Responsibility, the official fiscal watchdog, should have been given the chance to assess the economic impact of these plans. You have to ask whether part of these market moves are because these plans didn't have the credibility of an official forecast.
Lizzie, most of us in America get our Labour and Tory politics off movies like The Queen or The Crown, the Netflix series, in that. How close is this Labour Party to Tony Blair and Gordon Brown, or is there something new about it beyond 2 decades?
Well, I think the big difference is the handling of the unions, which are, of course, a hot topic right now, given we've got double-digit around double-digit inflation, and you've got strike action, including here in Liverpool at the port. The dockers saying that they want to be paid in line with inflation. And at the top of the Labour Party, you've got Angela Rayner, the deputy leader, saying that she would repeal all the government's legislation that's stopping the strikers. And yet you've got Keir Starmer, the opposition party leader, saying that his front bench can't be on the picket line backing the strikers. So there seems to be a bit of disunity there, whereas Tony Blair, of course, managed to do a very different job when it came to the unions.
There's also a bit of disunity when it comes to the Bank of England versus the government. There is some discussion and some pricing in the market right now of the Bank of England meeting in between meetings and raising rates in order to stave off some of the declines that we've seen in sterling. What's your view of how the government would respond to that?
Well, definitely all eyes on the Bank of England now. The government could only welcome it if the Bank of England stepped in to save the currency at this point. You've talked about how much the pound has tanked as a result of Kwasi Kwarteng announcing that more tax cuts are going to be in the pipeline. Even before all those pound moves, an analyst at Deutsche Bank on Friday was saying that the Bank of England needs to step in to regain credibility in this situation. I think it's 165 basis points of hikes in November now priced, which implies we're going to get an intra-meeting hike. But of course it's difficult for Andrew Bailey because he doesn't want to be seen to be responding to fiscal policy more than to inflation. The other question is, are they going to put the brakes on active gilt sales? Because it raises exactly the same dilemma.
Lizzie Burden, thank you. Live from the Labour Party conference, the opposition party in the United Kingdom. We'll have the Conservative Party conference later on in the next week or so. UK policy is in conflict. We've talked about that a lot over the last couple of months. The prospect that this would happen, that's the reality now. So we've got looser fiscal policy, fueling expectations of tighter monetary policy. And Tom, I think the greatest unknown at the moment is it's still unclear whether the BOE will step up and validate market pricing, and totally unclear to me on how the government would respond to that if they did.
A lot of good reading over the weekend on this. I thought The Economist did a great job, John, going back to Reagan 1. There were two parts of the Reagan supply side experiment. Number one was a lot like what we're seeing right now, lots of optimism, this is going to work, this is going to work, we're all going to get growthy. And the second part of Reaganomics was really, really sport. I wonder in the modern age, John, the open economy, how quickly that occurs.
We'll see how quickly that kicks in.
Yeah.
Lisa, can growth bail out this story?
And how quickly do they need to get that? But you were raising this point about what is the interaction between central banks and governments, especially if they're at odds with each other. And you've been talking about this extensively, John, and you are correct to do so because we have not seen anything like this in history.
Mohammed El-Arian wrote in The Guardian in the last 24 hours, and he's got this beautiful, beautiful concept, this idea that you're pressing the accelerator and the brake at the same time. What happens?
Yeah.
The smoke is coming out of Sterling's ears.
Yeah.
That's what's happening right now.
You burn out the car.
John,
Big time.
Arsenal Tottenham.
I'm pleased you're so focused on it.
It's cheaper now.
That's not how you spell it.
It's more affordable.
somebody is watching and says, I want to be Ari Emanuel when I grow up, what should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Live from New York City. Good morning. Kicking off a trading week in a big way. Futures down 0.6% on the S&P. On the Nasdaq, we're down about 0.33%. Equities off the lows. The action elsewhere in the bond market and in foreign exchange. Treasuries, 2s, 10s, and 30s shaping up as follows for a 13th consecutive session. Yields higher at the front end this morning by 7 or 8 basis points to just short of 430, 4.2779. Call it 428 on a US 2-year. If you get to what's happening in the UK, I want to frame the UK over the last month and have a look at where the 2-year yield is of the Treasury market and the 2-year in the gilt market. So we're up 88 basis points over the last month on a US 2-year, up 169 basis points on a UK 2-year. It's been a monster move worldwide, Tom. It's just been more acute more recently in UK markets, and that's why you're seeing this bigger move in sterling too, 107.37.
We're going to devote ourselves to this week, and what it comes down to, John, is the heart of the matter is flows. And I love what George Saravellos published moments ago with Deutsche Bank. He goes through the usual litany that everybody has, but he really talks about the nations that are going to have to rely on the kindness of strangers, not sterling, where it's a real economy with real employment, but other EM-type economies that are going to fall flat on their back and they're going to cry for help.
Tom, you're raising a really important point here, and I think it's worth sitting on. If you take a look at the makeup of the gilt market and who holds it, about 30% of the gilt market, UK debt, is held by foreigners. The important component, I think, of the UK debt market that separates it from in EM, which people have been throwing at the UK over the last month or so, particularly, is that the UK doesn't have this huge outstanding debt pile of foreign-denominated debt, Tom. That's a key feature that I think differentiates themselves from having this kind of negative, downward, self-fulfilling spiral that an emerging market might have.
Let's get to it right now, and we're going to continue to monitor foreign exchange as best we can. The DXY out near a 114 roundup is just extraordinary. John had to go out and find somebody on the streets of New York who's British and poor. Joining us, Caleb Pickering, senior economist at Berenberg Bank. What is it like to be paid in sterling and to enjoy a cup of coffee in Manhattan this morning?
I'm paying even more for bad coffee. It's great.
Let's get to it. Your insight here on Trussonomics. I saw Martin Wolf. I saw The Economist, the great work at Bloomberg. Your immediate insight on this experiment of the Prime Minister.
I think if the government had more credibility, markets would be more sanguine about it. We have a government here that lacks economic policy credibility since the Brexit vote. Markets don't like Brexit. They've been very nervous over the last few years about what's going on the Northern Irish border. And it means actually the detail at the moment isn't what is driving these markets. It's just the view that the UK is going to borrow more. If I really lean back, though, I find it hard to label this a panic. If I look at the moves in interest rate expectations, if I look at the moves in inflation expectations, what I see is that captures all of the move in gilts. so we don't have an outsized move here, which means does the Bank of England intervene if you can't see this as a genuine panic? I don't think they do. I think they stand by and see how markets play out.
They stand by and see how the politics plays out as well. Do they risk their, and let's remember, this is a young experiment.
That's right.
Do they risk their independence?
No, I think the Bank of England doesn't risk its independence. It reacts just to the inflation risks. The problem with Trussonomics is we only have, let's say, two parts of three parts so far. We have the tax cuts. They're substantial, but if you look at the detail, actually they don't go as far as the headlines might suggest. Not hiking corporation taxes is not going to be stimulating demand much. The regulatory stuff looks good, but markets just prefer good old-fashioned Keynesian demand-side shifts in economic policy. Supply-side policy is complicated. It will take time. The third element is what happens with government spending. I would not be surprised if the government actually sees this reaction and says, we need to come out with something soon to shore up confidence that we're not going to be borrowing excessively. So expect, I think, some policies to cut government spending, to downsize both sides of the state, the tax side and the spending side.
Oh, Callum, from what you're saying then, you think the government blinks before this Bank of England does?
I think that would make much more sense. I think if the Bank of England steps in here aggressively and hikes rates against this huge supply side shock. Remember, the context of all of this is that markets are incredibly worried that the West is basically heading into a recession. I think we're already in a recession in the UK and Europe. US is probably going to trail a little. And then the Bank of England and the UK Treasury are, well, A, the Bank of England is behind the curve, B, the Treasury is about to borrow all this cash to cut taxes. This is an experiment. The UK is now sticking its neck out. The Bank of England doesn't want to double down on the recession pressure by hiking interest rates in order to get these inflation expectations down. It would be better, actually, if the government came out and said, well, actually, if you look at our tax cuts, they're spread over the next few months, and we're going to cut government spending too. So I think it's the borrowing side that markets are afraid of. It's not necessarily the fact that the Bank of England is going to have to help the government bring down inflation. It's a complicated issue. Unpicking this is not easy.
Callum, with a lot of people, I think they're uncomfortable with consensus, particularly over the last couple of years, and overwhelmingly the consensus is this is the wrong thing to do. Is there a small part of you that thinks that perhaps this risk might be a risk worth taking?
Well, I'm actually, as it goes, a bit more sanguine about all of this. I think the tax cuts, by and large, make sense. I think the regulatory policy, by and large, makes sense. There's some weird stuff in there. I don't think we should have a growth target in the UK. 2.5% is just going to be virtually impossible to hit while you've got Brexit uncertainty hanging over the economy. But again, I think it just comes down to a view that the UK lacks credibility in markets now since the Brexit vote, since the Bank of England let inflation get so high. And so to be non-consensus in your economic policy is just asking for a negative reaction. I think, again, if we had a more credible government, markets would look more carefully at this and see, actually, cutting taxes into a recession for an economy that can largely follow the take the additional borrowing with some decent deregulation policy may actually lift trend growth over the next few years. That should be taken positively. It's just markets aren't thinking clearly at the moment. They're not pricing on fundamentals, and the UK has basically asked for a negative reaction with this policy, and it's got it.
Callum, John recently requested that we have a meteorologist on a regular basis to give us a sense of what this winter looks like, and perhaps that would be more accurate than a lot of prognostications. How much does the UK budget make sense with a warm winter?
Good question. The real policy to focus on is the energy price cap. If that was the only thing that the UK had announced, I think the markets would be fairly happy with the fiscal move. Essentially, what the government has said is, your energy prices aren't going to go up for the next 2 years further than they already have. That's probably a sensible policy. We could be looking at eye-watering energy bills if you didn't cap energy prices somehow. I think it's probably a bit too broad-based. You could have just focused on the households that really needed it, but that policy will basically cut at least 3 percentage points off peak inflation. We'll probably get to about 10.5 and top out, and it will probably mean that inflation rolls over with confidence next year once these energy price base effects. We're not going to be worried about a renewed spike this time next year. That's a fairly good policy, and essentially would be an act of God where energy prices would be if you didn't introduce that policy. And so it makes sense, warm winter or cold winter, this is probably the right thing to do.
Okay, but on the flip side, there's a concern that if you don't dampen demand, you're just going to have the same problem all over again. And you're going to create a spiral of spending, just basically that's fueling the pickup in demand that offsets the whole point of the program. What would you like to see from that demand-driven type of policy that could potentially bring this more into balance?
Demand is certainly a part of it in the UK, no doubt. This is not continental Europe where virtually all of the inflation can be explained by supply. But what you don't have is a US-style situation where demand is racing well ahead of its pre-COVID trend. What you have is a supply problem and robust demand in the UK. So the question is, what would inflation be if you didn't have this supply problem? Inflation expectations before this recent fiscal intervention might provide a good guide. You'd be looking at about 2.5%, 2.6% on a 5-year break even. That's high inflation, but it's not incredible inflation. It probably justifies the bank raising interest rates a little north of 3%. So that's the thing to focus on here.
My study is that current account balances matter in this, and it's something the media doesn't talk about a lot. We love to talk about sterling to 4 decimal points in that. I've got up the United Kingdom current account balance, folks, as a percent of GDP. Crisis, 1974, 1989, 2016, and they're all pointy stochastic. It gets fixed. Are we close to where it gets fixed?
No, I don't think so. The UK is not borrowing in a foreign currency. It's mainly borrowing in sterling. John made a great point earlier. If you actually look at structural demand for UK gilts, most of it's domestic, about 30% is international, and most of that is covered by a decent investment position in the UK. What you have here is the UK importing much more energy with a weaker currency. If you look through this recession, sterling is likely to be stronger, energy prices will be lower. So I don't see a structural current account problem that would normally drive a currency crisis.
Interesting.
Callum, thank you. As always, enjoy the bad coffee.
Just brilliant.
Here in New York. That's what the Brits are good at, Tom. Banter. See that comeback from Callum there? It's fantastic. Callum Pickering. You know. Tom, I think it's really important at this moment.
He reminds me of Eddie Izzard.
Really important at this moment, Tom, to get a better understanding of the gilt market.
Thank you.
There's a reason that the Bank of England is actually going to be actively selling gilts. The reason is because the average maturity of the gilt market, Tom, is 15 years compared to, say, 5 years in a treasury market. So if you're a central bank with a balance sheet, and if you were just going to allow roll-off, obviously if your average maturity is 15 years, you're going to be waiting a long, long time. So the situation in the UK is very, very different to the treasury market. And when we start to frame the comparisons, it's important to include some of that detail.
Well, this is really important, folks. We're going to do this all through the week of this, what is clearly a crisis. There's no other way to put it. And John, one of them is the way mortgages are done. Here, there's a whole fixed mortgage rate culture. And am I correct that most, the thing you're looking at in Knightsbridge and the others, that they're mostly floating rate?
Well, not just that, Tom. The priced off bank rate. That's the important difference between the UK and the US. So when you get a central bank hike from the Bank of England, that is what you're pricing your mortgage off if it's variable rate.
Right there.
That's the big